Good morning, everybody. So it's actually not looking very good in the pre-market right now. So I have some bad news for you guys. But before we get it started, I just want to ask you guys, give me a quick thumbs up. If you're new here, don't forget to subscribe, hit that notification bell, and let's get it started. So right now, Aurora Cannabis is actually currently down 5% in the pre-market. So yes, Aurora Cannabis is in the red. I don't know why they're in the red. I thought their earnings was a lot better than Tilray. And speaking of Tilray, Tilray is currently only up 1.56%. But I think overall, the markets are red. So it seems to be, my guess is that it's also affecting Aurora Cannabis. Because right now we have the S&P 500 down, Dow Jones down, NASDAQ is down, Russell 2000's up, crude oil is down. So most of the sector is down. So we have Aurora Cannabis once again down 5%, Tilray up 1.56%, Aphria is down 0.72%, Hexo is only up 0.29%, Canopy Growth is down 0.04%, Cron, last time I checked this, I guess they're broken even right now, and then even Apple's down 0.85%, Tesla's down 1.12%. So overall, the whole sector seems to be down. And I'm not sure if that's the reason why Aurora Cannabis is also down. But that's disappointing to see Aurora Cannabis down at 5.24%. So Aurora Cannabis keeps going down even more in the pre-market. And of course, we are going to be doing the earnings call live. And if you're not watching this live, I'm going to be putting a timestamp in the comment section. So right here we have it. Earnings call will start at 10:30 a.m. today. So we still got a lot of time. We're going to be looking at the pre-market, keeping an eye on Aurora Cannabis. I guess we're going to be seeing how low Aurora Cannabis goes, because that looks like what's going to happen today. Last night everything was looking good. Post-market was looking good. Aurora Cannabis was up 3% in the post-market. And I honestly think it's just the sector is bringing everything down, or it might be the fact that Aurora Cannabis lost $30 million. We could pull up the numbers again. Actually, I'm gonna lower my camera a bit. We could try to pull up the numbers for the earnings yesterday. Let me see if I could pull up those numbers again. I'm sure there's a lot of articles already talking about it. Maybe there's a bunch of negative articles highlighting some bad stuff on their earnings. So let's try to pull up Aurora earnings. Also, might as well check out some news on Aurora, see if there's any negative news. But then again, the whole sector is down, so I think that's the whole reason why Aurora Cannabis is down as well. So now we're down 5.13. How Aurora Cannabis fared in its third quarter. So there's a bunch of articles talking about their earnings this quarter. Might find something negative. I'm surprised to see them Aurora Cannabis losses growing faster than expected. Shares fall. See, there's one. We can read that article. That might be the reason as to why Aurora is dropping right now. Tilray jumps after Q1 revenue beat. Aurora slides as sales miss forecast. That might be it. We missed the what analysts were expecting us to do in sales. So we're going to read these articles, maybe get a little more information as to why Aurora Cannabis is dropping in the pre-market right now. But yeah, don't forget, guys, smash that like button. And I'm going to start reading some news. It's bright and early, so hopefully we're all awake by now. Let's try to start off with 50 likes. Yesterday in the earnings call, you guys did amazing. I ended up getting over 200 likes in that video, so I want to thank everyone who joined me on my earnings call yesterday. Okay, let's go. Let's find out. Let's read some bad news, I guess. 5 things you must know. No, I want to read the negative as to why Aurora is dropping in the pre-market right now. Aurora Cannabis fared. No, that doesn't seem too bad. Aurora Cannabis losses growing faster than expected. Shares fall. So let's just continue the full article. So Aurora Cannabis losses both grew faster than expected in its fiscal third quarter, according to an earnings report released late Tuesday that sent shares about 2% lower in the after-hours trading. We were watching the after-hours trading, and I'm not sure, maybe I missed something, but Aurora was up 3% in after-hours. But yeah, let's go on. Canada-based Aurora reported fiscal third quarter losses. Oh, there's a 9 o'clock bell. Fiscal third quarter losses at 160 million or 16 cents a share versus 20 million or 4 cents a share a year ago. Aurora grew revenue to 75 million, up from 16.1 million a year ago. After excluding excise taxes paid to the government, Aurora reported net revenue of $65.2 million. So I just want to find the negative. So Aurora's appetite for convertible debentures contributed to the company's losses as Aurora's share price increases. The companies must revalue the convertible debt and it has on its books. In the fiscal third quarter, that resulted in losses of 101.5 million. During the fiscal third quarter, Aurora also said it took impairment charges of 9 million due to changes related to assets that support the production and sale of indoor home cultivation system. So that might be it. It's because the $160 million in losses, or 16 cents a share. Also, I want to see if Aurora Cannabis's share dilution went up. Amount of shares outstanding went up. I don't know why I can't pull that up here. But yeah, anyways, what are your guys' thoughts as to why Aurora Cannabis is down 5% in the pre-market? So yeah, we're currently down 5.24% in the pre-market. So it's not looking very good right now. Aurora's appetite for no, we already read that. We already got that. So Aurora is down pretty much right here. The title says it all, because their losses are growing faster than expected. So let's see if we I swear we had another article. So I'm gonna keep watching the pre-market, see if anything changes. But to me, it does look like the whole sector is down. Surprisingly, Hexo and Tilray are still up. Cron, there's nothing on there for Cron. Apple is now, Apple was in the red. I don't know what happened there. I'm just gonna close some tabs, force quit some. Who was expecting a good pre-market this morning? Because I know a lot of people in the live stream yesterday were excited because things sounded pretty good. I mean, the losses, I guess we kind of overlooked the losses. That's what happened. And I'm not sure what's going on with the chat, because I don't see anyone chatting up. Let me check on my phone. Maybe I'll just start looking at the chat on my phone from now on. That way I don't have to quit switching back and forth. 48 North signed a deal with Alberta. I guess no, my chat is fully up to date. How's the video quality for you guys? So right now, if we look at these charts for Aurora Cannabis is currently sitting at $7.95 in the pre-market. So if that is the case, this morning we're gonna have a nice gap down below the support line. So we might continue to downtrend on this line. So we might have a gap down pretty much right here on the support line. So we're literally gonna gap down all the way to this downtrending support line now, and then depending on how the day goes, we're either gonna bounce back up or continue to downtrend. But the whole sector seems to be down. So now Aurora is down 5.73% in the pre-market. So it doesn't look like it's getting any better. What's going on, Jared and Stephen? I'm not sure if you checked out the pre-market, but Aurora is currently down 5.73% in the pre-market, so it's not looking good. Not looking good at all. Definitely not what we were expecting. But we are here to, I think the losses from Aurora are to be expected considering their growth strategy moving forward with pelts. People are idiots. The 30 mil loss was due to all the purchases. I agree. I'm going to pull up their stats again because I feel like we were only looking at the positives and we overlooked the losses. So I have their stats right here. You know what? I'm going to get rid of Tesla. We don't need to know that. Tesla's down in the pre-market. We already know that. Apple's also down in the pre-market. We already know that. I'm just going to be highlighting the cannabis sector. Aurora Cannabis is currently down 5.73%. So we're just going lower and lower. Tail rate is currently up 1.97%. Not as good as they were doing yesterday. Aphria is currently down 0.79%. Hexo is up 1%. Canopy Growth is only down 0.07%. I think you know what happened? I think Aurora took a long time to write this earnings report because they pretty much sugar-coated it. They made it look really good, and even I overlooked the negative because all they did was like, boom, good stuff. Canadian consumer up 37%. They just shoved the good stuff in our face, and they kind of hid the bad stuff here. So right here we have losses, earnings attributable to common share, 158 million in losses. Adjusted EBITDA negative 36 million. So those were the two negatives out of the whole earnings that the only reasons I could see as to why Aurora Cannabis is now down 5.24%. Hold on. No, I think we're down more now. 5.73%. So, yeah, Aurora is currently down 5.71% in the pre-market. We're in the red. It's not looking good at all, but good to see you guys joining me today. Once again, don't forget, smash that like button, guys. Let's try to get this video to 100 likes. We got another long live stream, and if you guys aren't watching this live, I'll be putting a timestamp in the comments section just like for the other videos, so you guys can go straight to the earnings call. So yeah, for real, everyone is so severely caught up with a short term. It all looks good. I know exactly. When I was reading the reports yesterday, I was pretty surprised at how everything looked good. But then we did overlook the two negatives, which was the adjusted EBITDA. Sorry, it's really early for me. And the earnings attributable to common shareholders. We overlooked those two things. The revenues were decent, especially international growth. I got out the other day with a loss and put the rest in Bitcoin. Well, best of luck in your investment. I know how risky it could be investing into something like Bitcoin. So I just want to see how many likes do we have, guys. Don't forget, smash that like button. I'm going to be asking you to smash it throughout the day, mostly because it does work. So right now we are at 19 likes. Let's try to get it to 50. Let's try to get it to 100. And we will be watching the pre-market like a hawk. And as you can see, Aurora Cannabis is not doing great, down 5.61% in the pre-market. If I check here, they're down 5.83% in the pre-market. And we are waiting for the earnings call, which will be at 10:30 a.m. But that's totally fine. In the meantime, we could definitely be looking at other companies in the pre-market. So if you guys have any requests, their goodwill is huge right now because of all the acquisitions. Good point. Linda de Marche. Oh my god, that's annoying. I'm turning off all my alarms right now. Let's turn that off. We'll have the 1 minute bell ready for the I think I should close my window. We valued this company at $5.60 last week. $160 million loss. Bust. There is another 190 million of. Hold on, let me just close all this of undeclared losses. Hangxi, you're a bear. I can tell. But honestly, I like to hear both sides of the story, so I don't mind. How about CTST? You know what? Let's look at companies right now where we've been looking at Aurora for a while. Someone requested Australia's capital, so we're gonna be doing that, and then we'll look at CTST. So if you guys have any requests, we can do that. Of course, we'll still be keeping an eye on Aurora, which is currently almost down 6% in the pre-market. So it's getting worse and worse as the clock. Now we're down 6.07% in the pre-market for Aurora Cannabis. So Australia's capital, we seem to have a nice support here at around 98 cents. Might as well call it, yeah, 98 cents. I'm going to draw a support line at 98 cents. I'm going to move it up a bit. So we're looking at ticker symbol AUSA. Currently up, I think they were up 3.06% yesterday. Let's look at their financials. So this company I do think is a little overvalued, or that's an understatement. Price to revenue at 1,092. Total assets 59 million. Market cap 144 million. So price to revenue definitely turns me off. We are near the bottom of the support, but we've seen this company go below $1, which I would feel more safe buying this company below $1. At one point, this company was at I think it was at 60 something cents. Right now we seem to have found a support at around 98 cents. We have a previous support right here. I think this was 90 cents. No, 94 cents. Honestly, I hold this company only because I was given free shares. Right now I do think this company is a little overvalued. So let's look at CTST. I'm so sad. I hope it doesn't hit $7. This downtrend is good news because I can buy in cheap at some point. Not yet. That's one way of looking at it. So now Aurora Cannabis is down 6.61%. It keeps going worse. So we have officially broke below the support line. But this is in the pre-market. Anything can change once the market's open. But I'm just gonna pull up Aurora Cannabis charts again. So we'll be looking at both the American and the Canadian side. So right here is the American support line. I mean the Canadian support line at 1075. So we have officially broke below it. I think we will continue to downtrend. I don't know if we're gonna be downtrending at the pace of this downtrending line, or I feel like we might break below this line as well. Hold on, let's keep it red. So right now we're sitting pretty much around here. In the American side, I really hope my lines are still there. Usually my lines disappear. Oh, they're still there. That's good. So on the American side, we are right here below this line right here. So we are definitely downtrending once again. And I do think the main reasons was everything looked good in the earnings except for the adjusted EBITDA and the loss of $158 million. So it's not looking good for Aurora Cannabis in the pre-market. Down 6.55% in the pre-market. It's very disappointing. I hope it hits $7 to $8 Canadian buying opportunity. If it goes below $8 Canadian, I'll definitely be buying some shares because I sold a lot of my shares in the recent run, and I'm holding onto a small position. So I would love to add. I said it yesterday. I'll be happy whether Aurora goes up or down. I was happy when I read the good news, and then I was happy to see them up 3% in the post market. But I did say it's going to be interesting to see the pre-market, and right now we're watching the pre-market and we're down. It looks like we're down 6.32% right now, 6.55%. So it's just going lower and lower. My pick for marijuana is LHS Liberty Health Sciences. I think it will double within a year. So yeah, we're gonna how come Tilray up? They lost money too. That's what I'm saying. Tilray is actually up 1.68%. Tilray was up big. I think the thing is we have higher expectations for Aurora versus for Tilray. For Tilray, our expectations were a lot lower. So the fact that Tilray's earnings weren't half bad, I think investors like that more versus Aurora, where Aurora is like the golden child, the golden, I don't know how to say, the golden boy. Everyone expects Aurora to do amazing because they're the number one pot stock, them and Canopy. So yeah. Let's look at CTST. I'll be doing some requests in the meantime. We still have a lot of time in the pre-market, and we still have a lot of time till the earnings call. CTST. So if you guys have requests, we can look at other companies. Of course, we'll keep bouncing back to Aurora Cannabis. So CTST. So you can see right here there's a gap down, and what happened recently, that gap got filled. I don't know why it is, but these gaps, they're usually always good swing play opportunities, especially when you see a huge gap down here. Almost immediately got filled. It gapped down all the way from $6.38, went all the way down to $5.58, and then it got filled at $6.40. Literally got filled. So now they're starting to decline. We have a gap up here. I'm not sure if it's gonna get filled, because I feel like that gap up was just to fill this gap down. But we also seem to have a support here at around $5.58. We're gonna look at their 1-year charts in a second, and I want to just take a peek at their financials. Financials don't look bad. Price to revenue 18.9, price to sales 18.9. I mean, if we're looking at a normal company, a lot of people would say this is overvalued. But since this is the cannabis industry, I would say that's not bad, because when you compare it to other companies, it looks pretty good. Total assets 150 million, market cap 642 million. We do have a bigger support line here at around, I would say, $5. So I could see this company going as low as $5. I'm gonna draw a support line here at 5, and I think at 5, I think I would recommend this as more of a buy. We have a resistance here, I would say at around $9.85. Could be as high as $10. Let's just put the resistance at $10. I mean, we do seem to be catching it right at the bottom. If we were to catch it closer to this support right here, I think that would be great, because it's been trading in between this line a few times, except for this one time when it went as high as $7. So we can say that's another support. $7. But I like the pattern. It's been pretty consistent, and it doesn't look horrible on paper either. So how about, we'll definitely be looking at other companies. So I just want to keep bouncing back to Aurora. Let's see how bad it is. Aurora is down 6.67% in the pre-market. What's going on, Aurora? Smash that like button. Thank you, Brian. Yes, make sure to smash that like button, guys. Let's see how many likes we got. Let's see it. So we're at 39. Let's get it to 50, and then we'll go from there. 48 North, new deal with Alberta and grow license coming soon. Thanks for that news. I like 48 North, actually. And I know they had a nice little correction lately, so I like them, especially below a dollar if they can continue to dip below a dollar. So right now we're at $1.02. Today is a red day, so I'm hoping 48 North drops, but maybe after that good news, 48 North signed supply agreement with AGLC for outdoor grow cannabis. So that was an hour ago, so we actually might see 48 North make a run, but I would love 48 North to come closer to this support, the 90-cent support, or anything below a dollar. I feel like I might start a position in 48 North. I just know right now the markets are rocky, so it's always a little risky knowing when to start a position. But I definitely like 48 North. And we'll be looking at other companies. HERTF, we could look at that. How come Tilray's up? Lost money. 2 people selling here will kick themselves in an hour. So we're going to look at HERTF, then we'll look at Baidu after. RTF. Heritage Cannabis Holdings Corp. Penny stock. So right here we seem to have 2 support lines, one at 35 cents. I'm going to draw these lines. $0.35. And we seem to have another one right here at around 20 cents. I'm gonna make this one red, but I feel like we do have a bottom. I'll say the bottom is anything below 15 cents, which is right here. Let's look at them on paper, and then of course we have a resistance line here. Hold it, break above it. I'm gonna say the resistance is at 50. Well, it should be here at around 50 cents. And let's make that green. Let's look at their financials. Price to book 8.3. That is a little high, but it's not bad. Total assets $44 million in assets. Market cap $148 million in market cap. Total shares outstanding 375 million shares outstanding. I mean, it doesn't look bad. I do think it has more room for downside. We are approaching the support, but it looks like we broke below it. It could continue to sink even lower. It is a penny stock. I always say the same thing about penny stocks. I don't think there's really a safe penny stock. There are always gambles, and of course you never know which penny stock's going to be the one that goes big. But definitely I would be more comfortable buying in these lower ranges, below 20 cents or closer to 20 cents. But yeah, let's go on. Oh, Departures Capital is in the building. What's going on, man? How many people you have in your live stream? Like 2,000 people by now. So yeah, have you seen Aurora Cannabis? Aurora Cannabis is not doing good right now. Down 5.48%, 5.61% in the pre-market. It's not looking good at all. But yeah, we're gonna do the next request, which was Baidu in here live. Baidu. Let's see how Baidu is doing. Baidu Inc. So this is finally not a penny stock. $152.39 per share. Currently up in the pre-market. Looks like we've recently had a nice sell-off. And looks like we recently broke below its support. So I'm going to be drawing a support line here, which is at around $155. So support line at 155. Let's look at their financials real quick. See, and we do seem to be near the bottom or right at the bottom of the 52-week range. This company actually looks pretty good. Price to earnings is 13. Price to revenue 3.5. Price to sales 2.2. Price to sales 3.5. Total assets 44 billion. Market cap 53 billion. This company looks really good on paper. It actually looks undervalued. Let's look at the 5-year charts. Look at their lifetime. We had a previous support here at around, so this actually might be the support 160. I'm just going to draw the 160 line just in case, because that seems to be acting as a support as well. So 160 was a support, so maybe we are below support right now, and this line should be non-existent. So we do have a support here at around 160. We even have a resistance here. Might as well draw that as a resistance line at 180. This company looks really good on paper actually, and they're profitable. 13 PE ratio is pretty good, and this is an internet services company near the bottom of the 52-week range. Last time we seen these numbers was in 2016, so I like this company. This was a good call. So whoever called it out, I like this company. Obviously, you got to do your own due diligence. It looks good on paper, and it's near the bottom. It's had a huge sell-off. It actually appears to be oversold right now. So I wouldn't be surprised to see this company make a nice run. And it seems to be we seem to have gap down as well. Let's look a little closer in the. Look at the 1 hour charts. So ticker symbol BIDU. Yeah, we have a gap down here. We have a gap down here. Looks to be oversold here. I won't be surprised to see this company break above this support and make a nice run. So this is a good call. Good morning, Lucifeel. What time is the call? The call is at 10:30 a.m. If you guys aren't going to be staying for the live stream, once the video is posted, I will be putting a timestamp just for the just for the earnings call, so you guys can go straight to the earnings call. Right now, we're just doing a few requests, and the last one we did was ticker symbol BIDU. I actually like this company. So far, it's my favorite request of the day, so that's a good call. Out of the hot tub hustler going to be an interesting after Aurora's numbers came out so late. Yeah, so far it's been pretty interesting because actually Aurora Cannabis is now above the $8 line, so we're now only down 4.5%. So Aurora Cannabis is somewhat improving in the pre-market. I like Baidu because it's undervalued. Google of China earnings tomorrow. I like Baidu too. You know what? And then the fact that earnings are coming out tomorrow. But then again, who knows? I don't know enough about the company, but right now, as of now, on paper, looking at these charts, this company looks really good. So that was a really good call. Ticker symbol BIDU. You guys should add that to your watch list. And then we have Hongxi, the bear. No one is buying Baidu. Hongxi, man, you're tough. You're tough to sell. But you probably know something more than I don't. I just looked at it real quick on paper, on the charts, and it looks really good. We'll find out in a week or so how they're doing. Let's look at Cron. I don't know if you want me to look at American or Canadian. I'm gonna do American because we'll most likely see a pre-market on that. Cron is currently down 8 cents in the pre-market. So Cron has had a huge sell-off. We had a nice little uptrend for a while. Now we seem to be downtrending, making lower lows. Let's draw a downtrending line now. It's been a while since I looked at Cron. Let's fix this line a little. Yeah, definitely downtrending. Let's see. No, that's not red. So we're looking at Kronos right now. mean, I would say this is a support line here at 14 American. And I do think we have the potential, but how low can we go? To go as low as maybe 30, because this was previously acting as a resistance line. So sometimes we see cases where the resistance line turns into a support line. So right here we have a resistance here at 13, so that could potentially be another support, $13, because sometimes we see resistance turn into support. Of course we are downtrending, so the whole sector seems to be selling off. Kronos, I've made a video on Kronos pretty much saying that it's one of the most overvalued companies. I'm actually surprised that Kronos is a profitable company, because they have a P ratio of 54, which is still high, but nonetheless they are profitable. Price to revenue 355, it's a little high. Price to sales 435, also a little high, but that's Kron for you. Price to book 17. Total assets 2 billion. I'm gonna sneeze, or maybe not. Total assets is 2 billion. Market cap is 5.1 billion. So it's actually not looking that bad for Kronos. The fact that they're profitable just surprises me. So Aphria, Tiva. Alright, we'll do it in order. We'll look at Aphria first. Baba just reported 40% increase in revenue. Their stock is going down. Yeah, that's their stock is probably their stock is probably going down just based on the trade war with the US and China. So at this point I don't think it mattered what they reported. We just need to see the whole trade war with Trump and China to get settled, because Baba was doing good, and then as soon as some trade tension started going on, like, not good for you. All these Chinese stocks started dropping. So we could look at Aphria. It's the next request. 5 minutes till the bell opens, guys, and we'll take one last peek at Aurora Cannabis, and it actually seems to be improving. Aurora Cannabis is now down 4.05% in the pre-market. Whoa, never mind. Aurora Cannabis is now down 6.45% in the pre-market. So it just keeps getting worse for Aurora Cannabis right now. And earnings call will be in around 1 hour. So next company will be Aphria. We're going to be looking at the American Aphria. I don't think I have lines drawn in, unfortunately, but we can draw them. Draw them live. Aphria. Wow, Aphria really dropped as well. I think after their earnings, Aphria had a huge sell-off. Yep. Some crooked lines. Should really straighten that out. So Aphria had a nice little sell-off. We also seem to have a nice support here at around $7. Actually, not well, it's not really trading below it. I'm gonna put the support right where I see Aphria seems to be bouncing off right now. I would say the support's at around $7, but if that were the case, Aphria is trading in between its support line right now. No, it looks good. $6.85 is the I'll put that as the support line right now for Aphria. But we obviously could go lower. We've seen Aphria go lower, but that was mostly because the allegations. I could see Aphria going as low as $6.50, which we've already come pretty close. So I'm just gonna bring this line to the $6.50 mark. Let's see how they look on paper. Aphria on paper, it's actually not that bad. Price to revenue ratio is 19.9. Price to sales 63.49, and total assets 1.5 billion. Market cap 1.7 billion. I mean, when you compare that to Kron, Aphria looks way better on paper, but they're not profitable. And the reason why they probably look not undervalued, but they look way more better value than Kron is because of that huge sell off. So at this point they probably were overvalued, and then we dropped almost, how much did we drop? We were sitting at $10 and we dropped all the way down to $6.90. So we dropped $3.10. So the more Aphria drops, the more attractive it looks. And they do seem to be oversold. We have a gap down here. Usually what happens is these gaps eventually will get filled. So Aphria is looking better. The more it drops, the better it looks. I'm actually, if it continues to drop, I'll increase my position. And there is the 1 minute bell. So markets are going to be opening in 1 minute. Let's look at Aurora Cannabis before the markets open. Aurora Cannabis, let's see how you're doing. Currently down 5.73% in the pre-market. Everyone knows China's market on life support. Baba down 18% in 2 weeks. I'll buy Aurora when they actually have a business plan and follow it. Hong, look for a summer sale. So, and that wasn't me. I was just reading what Hong Shi had to say. And you know what, Hong Shi, you make good points. I'll give you that. So markets are officially opening real soon. I'm gonna be checking my portfolio on my phone. Don't forget, guys, smash that like button. 1 hour till the earnings call. Also, I'll be putting a timestamp on the earnings call, or maybe just uploading a separate video just for the earnings, so that way you guys could check that out. So let's see, how many likes have you guys, how many times have you guys smashed that like button? 53 times. Good job, guys. Let's try to get it to 75 and then 100. So don't forget, smash that like button. We'll still be looking at companies as the markets open. Or the markets are officially open now, 8:30 a.m. I mean, not bad. Aurora Cannabis is down 3.5%. At least they, on the bright side, let's look at Aurora Cannabis charts. We're still hovering above that support line. I thought we were gonna break below it. So let's look at we're gonna look at American charts for now. Aurora Cannabis is sitting at $8.70, and we're literally hovering right above the support line. We hit it right here, and now it seems to be pushing up. So let's look at the 5-minute charts. Whoa, what's going on, Aurora? Oh man, Aurora's going on a nice run. We're catching this live. This candle is moving. And just like that, Aurora is gonna be even. Huge run. Holy crap. We're seeing this live. Aurora is just pushing right now. I'm gonna put out the 1 minute candles. So pretty much in the morning we started off huge gap down all the way down to the $8 range, and in a matter of not even 1-2 minutes the gap got filled. Just like that gap got filled. We're back to square one. It does look to be a little overbought. We see a lot of volume, huge amount of volume. Let's see how much volume. Volume 2.2 million. So this is gonna be a roller coaster ride, because now we're seeing Aurora Cannabis start to dip. So we literally filled that gap. We're starting to dip. We're watching this live. That was pretty cool to see. Literally that candlestick was just shooting right up. I think that was just pure swing traders picking that up at the bell and then having a nice sell-off. So I do believe it's going to be a very interesting day. On the negative side, the markets are down. We have Dow Jones down, we have S&P 500 down, we have NASDAQ down. Crude oil is down, so it's not looking good for the entire market. We have silver's down. Everything is down. So I think there's only one thing that is up, and that is the Russell 2000. How is it that Aurora reports less losses per share than Tilray, yet Aurora prices are dropping and Tilray is rising? What am I missing? I know, but I think analysts had more expectations for Aurora versus what they expected for Tilray. I think people expected Tilray to do horrible, and the fact that I think one of their statistics said that their revenue went up 195%. So that kind of Tilray had lower expectations, and the fact that they released half decent numbers, people were surprised by that. Aurora had an adjusted EBITDA, a loss of 36 million, a loss of almost 160 million dollars this quarter, and I just don't think analysts expected Aurora to lose that much money, so that could be one reason why. But I agree with you, and I'm sure we're all frustrated at the fact that Tilray. We might as well look at Tilray, see how Tilray's doing. Tilray's up 1.37% today, up 1.05. It's not Tilray's not doing that great on the. Aurora is currently up 0.6%. You know what? I'm actually happy because in the pre-market Aurora was down 6%. I think at one point they were almost down 7%. So the fact that Aurora bounced back up like that, I think it's looking good. We're gonna see. Obviously, we'll be keeping an eye on Aurora for the next hour because we still have to wait for the earnings call, and the earnings call is supposed to be at 10:30 a.m. But unfortunately, yesterday earnings were supposed to be announced at 4, at 5, at 6, at 7. I think we waited for 4 hours. Literally, we sat there and waited for 4 hours just for the earnings call, for the earnings to be announced, and boy was it ever a long wait. But yeah, in the meantime, don't forget, smash that like button, guys. Still got 1 hour till the earnings. We're gonna hear what Cam Batley, what Terry Booth have to say, hopefully, and we'll also be keeping an eye on Aurora, which seems to be going in a downward direction now. We had that gap filled. Now we're going down again, witnessing this live. So Aurora is now down 2.27%. Markets are officially open. We could start doing some requests. Patel rules requested Tiva. Jason requested Kieran. PDSB is rocking. I'm kind of curious to see what you're talking about, PDSB. But we're gonna do your requests in a minute. PDS of Technology Corporation. It's a new ticker symbol, and you're absolutely right. They're currently up 28%. PDSB, a lot of volume. Let's see how much volume. Actually, it's not even that much volume when you compare that to Aurora, 2 million. I guess for how many shares outstanding? 1.5 million shares outstanding compared to 1 billion in Aurora. So this looks like a lot of volume for a company like this. But yeah, this company is on fire. Wow, it just went up from 20-something% to 38%. PDSB is on fire right now, up 38%. Also pushing forward. So whoever called that out, that's a good call. Unfortunately, it's too much of a gap up for me to jump in. That was Remy. Good call, Remy. So we're gonna look at some other companies. We're gonna look at Teva, TEVA. Teva Pharmaceuticals. Currently down 4.5%. Wow, huge gap down. Making big long-term bets on Teva. Option traders are making big long-term bets on Teva. This was 21 hours ago. So this company is definitely near the bottom of its 52-week range. Had a huge sell-off and a huge gap down. I won't be surprised to see this gap filled. It does seem to be a little oversold here. Bounced all the way down from $12 all the way down to $11.70. It actually looks like a lot bigger. Like the gap was a lot bigger than that, but I guess not. Let's look at them on paper. They look way undervalued on paper. Price to revenue 0.7, price to sales 0.7. Total assets $59 billion in assets and $13 billion in market cap. So this company looks good on paper, looks undervalued, but there has to be something wrong. Let's look at their all-time charts. So we've seen this company go as high as $68, sitting now at $11. Could we potentially go back to these lows of $3? This is definitely a risk right now because it's a falling knife. Yes, we are catching it near the bottom of its 52-week range, or literally right at the bottom of the 52-week range. But why has this company been dropping for the past 2 years? I don't know enough about this company. It's a pharmaceutical company, but I don't know enough about it to tell you why it's been dropping. On paper, it looks good. Looks undervalued on paper. Chart looks good. We seem to be hitting a support here at $11.70. So doesn't look bad though. Gold Mother, the market is open. We can take a look at Kiron. Let's take a look at Kiron and let's see how ACB is doing. Down 2.6%. So we'll be looking at ticker symbol KHRN. I think that's Kiron. Currently, Kiron is actually up 1.25%. Let's pull up at least the 1 hour charts. So we once again we've seen a gap here, recently got filled. Seem to have a support at $2.90 for Kiron. I would love to see their valuations. Every time I check Kiron, it's blank. So yeah, there's no price to revenue, no price to sales. Only thing we have is they have $18.7 million in total assets and a market cap of $298 million, which isn't the greatest. Right now we seem to have a support here, a resistance here at 325. So I would also love to see Kiron break above this resistance line right here, which we seem to be struggling to get over. Then we have another resistance here at around $3.70. If Kiron hits 370 again, I think I'll be collecting some profits. I'm currently holding onto Kiron. Small gains, so I would love to see my gains increase. I've been swing trading Kiron for quite some time now. Well, not that long, but honestly, I've just been looking at Kiron as a swing trading company. We have a nice support at around $2.90, so anything below $3, I've been starting a swing trade with them. And then once it breaks above this resistance, 370, definitely selling. I would love to see it go back up to $4. That would be a strong sell. At that point, I would just collect all my profits. But we haven't seen those numbers in a while. Would be nice to see them make another run like that again, that's for sure. Am I still? Yes, I am. I actually just picked up some more shares recently on the drop. You know what? I'm gonna check my portfolio, see how it's doing. Just give me a second, guys. But I am planning on buying more Parcel Pal. The more it drops, the more I plan on buying. Ticker symbol PKG, and it just went up, so I'm glad I picked up when I did. Well, actually it's down 1.8%, but yeah, I had a huge hike. I picked some up in the recent drop. Had a huge run, dropped all the way down to 21.5 cents. I was sitting pretty at 37 cents, though. I should have collected more profits then. I already collected some profits, so at that point I had a small position, had a huge sell-off. I picked some more up on this dip, and I don't know. If it continues to dip more, I'll definitely be buying more. We seem to have a nice support for Parcel Pal at around 22 cents, I'm gonna say. Let's look at Parcel Pal. PK, ticker symbol PKG. I'm gonna put this support at 22 cents, and I'm gonna put a resistance here at around 37.5 cents. I'll be sure to collect profits once again if we go that high. Nothing's ever guaranteed. And how is it that, okay, we already read that. What chart view you use? I use tradingview.com. It's absolutely free to use, and the only thing is you do get a lot of pop-ups if you use a free version, but I'm not complaining. We're gonna look at Emerald Health in a second. I just want to check my portfolio. Honestly, I haven't been checking it lately because the market's been red, and usually when I see the market's red, I'm just like, forget it. I don't even want to look at it. So we still have 45 minutes till the market's open. Honestly, this is nothing compared to last night. Last night I was literally sitting on this chair for over 4 hours. So yeah, it's not looking horrible, but it's definitely not looking good. So Emerald Health, we can look at Emerald Health. I honestly hope Aurora announces the earnings when they say they're gonna do it, because I would not. I don't want to wait another 3 hours after they announced that they would announce their earnings calls. Emerald Health Therapeutics. So this company has had a nice little sell-off. Oh, let's go back. Now we were uptrending. It seems like a lot of these companies had the same pattern. All 2019, we were uptrending. It seemed like, no, it's almost different than Aurora. But then what happened is we started consolidating after, and now we're all downtrending. Literally, that's happened to Aurora. It's happened to Aphria. A lot of these companies. All of 2019, we were uptrending. Now we're downtrending. Let's draw that red. We seem to have a support here at around $3.40. I'm not gonna mark that red because I feel like we could go lower potentially. I'm gonna say its low point would be around here, $2.80, because we've previously used that as a support as well. And I would mark that as red. Red means anything below the red line I would consider a strong buy. Let's look at them on paper. Look overvalued. Price to revenue 269. Price to sales 269. Total assets $209 million in assets. Market cap of $525 million. Doesn't look honestly, it doesn't look that great. But let's see what else you guys have. Need some coffee. I know the thing is I don't drink coffee. I barely drink anything that has caffeine in it. I don't really like pumping my system with caffeine. ACB is holding up well. I know I am very tired this morning. I guess you could tell the difference from my morning live streams versus my after or evening live streams. Yeah, that's true. ACB is still up, $8.27 American. That means we held support. We literally bounced off support, which is a good thing. I mean, I know we're still down on the day, but on the bright side, we held support. Let's just take a quick look at Aurora Cannabis. So out of this whole, I mean, the whole sector is down. So we can't just blame this all on Aurora. The whole sector is down. A lot of companies are red today. It's not just Aurora Cannabis. But I did draw the support line at $8, and we literally just bounced right off it, immediately bounced up. So I think that is a good thing. At least we're not breaking below it. Unless you want to see a correction, then obviously you want Aurora to break below this $8 support. But as of now, we literally just bounced off it, and gonna wait for earnings call. Maybe they're gonna announce something. Who knows? I'm in it for long haul. Good morning, Dabasish Kabar. Need some coffee. Slack should be on a good IPO on June 20th. Slack, is that the ticker symbol? Ticker symbol Slack. I'm gonna look it up. I have no idea what that is, to be honest. Ticker symbol Slack. Been in the red for over 50k and been in the green for over 100k without exiting my position. Oh, you got some serious patience. If I seen 100k in gains, I would have at least collected 25%. I like to sell off, especially when I see some huge swings, because think of it this way: imagine you collected some profits at 100k. Plus, and then when it dropped 50k plus, you average down, so in a way you would benefit more from it. But I guess if you're just in the long term, you don't want to swing, you just want to keep it there, it's totally fine. I'm not sure what ticker symbol would be. Writing it out. Write it out for the long term. If you believe, you might as well follow your gut. Some catnip tea. Is that for cats? CLRB is, what's going on here? CLR, where did I miss it? What about Canopy? We could look at Canopy. I had the FOMO. You should try catnip tea. I could look into it, as long as it's not for cats. I could consider it. Okay, let's take a look at Canopy. We have 40 minutes, 39 minutes till these earning calls. Let's look at Canopy Growth. I'm just gonna look at the American ticker symbol. Unless you want to request a Canadian, then just let me know. But Canopy is also down 1.61%. Had a huge gap down here. Oh no, we had a gap up. Let's look at the 6-month charts on Canopy. That's not 6 months, is it? Wow. So yeah, we've been using this $50 line as a resistance for Canopy. We have not been able to break above it. Well, besides here for October, which was pretty much because of the legalization hype. But ever since legalization, after the whole hype was over, Canopy has not been able to break above the $50 support. We've broke above it and immediately got rejected. So we're using that as a support. I don't know why this line's green. This should, I guess this is my American one. This should be red. This would be a strong buy right here. I doubt we'll ever see these numbers again, but if we did, I would definitely consider that a strong buy. I would say we also have a resistance here at around $42. I'm gonna change that to green because I don't think that's a strong buy, but it's definitely a resistance. And we're gonna look at them on paper. Let's see how they look on paper. Well, technical analysis for Canopy looks like it's a sell. So we have neutral, a sell, and a sell. 1 minute we have a sell, and a strong sell. Not a profitable company. Apparently they're not expected to be profitable for the next 2 years or something. Price to revenue 135 million. 135 price to revenue. Price to sales 269 price to sales. Total assets 6.4 billion. Market cap 15 billion. On paper, of course, they look overvalued. But I do think if Canopy were to go back down closer or below the support line, even if it hit $40, that'd be a decent pickup. But the lower it goes, the closer it goes to this red line, I would definitely consider that a strong buy. If Canopy, you know what, let's put a more realistic support here at $32. Anything in between these lines, I do think it's a strong buy. In between these lines right here, this is just like swing trading, support, resistance. So that's it for Canopy Growth. Joe Gonzalez, message retracted. Yeah, that's true. It happens. It happens, but that's the reason why you don't have to sell out all your shares. You could collect some profits, so at least that way you never lose money collecting profits. Oh, I just talked about Parcel Pal. Actually, Parcel Pal is one of the few penny stocks that I like. I could talk about them again if you want me to. Get out of red stocks and go green. It's good non-coffee. Medmen. Told you Aurora is going down. They're not doing that bad. Only down 1.5%. Pre-market was a lot worse. They were down 5% in the pre-market. But it's not just Aurora that's down. The whole sector is down. S&P is down. Dow is down. Nasdaq's down. Russell 2000 is down. So the whole sector is down. It's not just Aurora Cannabis. But yeah, I actually do like Parcel Pal, and I'm actually currently holding Parcel Pal. I recently bought Parcel Pal on the recent sell-off. I'm just gonna be looking at the Canadian symbol. So we have a support here for Parcel Pal. I would say at around 22 cents. Resistance here at around 37.5 cents. Would love to see Parcel Pal go back up to 45 cents. We've seen to hit that a few times in the past. Yeah, that would be nice to see. I'm actually gonna draw another line for Parcel Pal here. So this is one of the few penny stocks that I like, and I'll probably be always holding onto a small position long term. I just like what the company's doing, so. But I do think anything above 43 cents, I would consider at least selling half my position at this point. And then if Parcel Pal ever goes back down to, you know what, I might as well add more lines here. If I ever see Parcel Pal go as low as 19 cents, I do consider that a strong buy, or anything below that is definitely a strong buy for me. So swing trading in between these lines, strong buy for anything below here, and strong sell anything above here. and that's Parcel Pal. And Parcel Pal is a freight and courier services. And they don't look that bad on paper. Price to revenue 7.0, price to sales 48. I do think that's a little high. Even the price to book is a little high. Total assets 3.5 million, market cap 19.8 million. Anyone like CanVcell, CNVC? I'm pretty sure I've already spoke about them. They're not bad. Actually, let me make sure I'm talking about the right company. I do remember doing them, I think yesterday. It is a penny stock though. Super high risk. And this recently IPO'd. Oh no, this was a 2016 IPO. I kind of just want to look at their financials. It's all blank. This is a hard one to determine because valuations are blank, balance sheet is blank, everything is blank, so there's not much information I can get on it. I would feel more comfortable buying it here around 15 cents versus in the middle of its 52-week range, because it seems to be in the middle of the 52-week range. So right here, 15 cents, I would be more comfortable buying it. Either way, it's a penny stock, so it's a coin toss. At this point, it could go either way. If they do what they say they can do, could be big. Are you talking about CNBC? And we have half an hour, guys. Half an hour till the earnings call. So when the earnings call does happen, I'm going to turn off my mic. Well, actually, I'm going to play my mic because that's where you guys are going to be listening to the earnings call. And I'm going to turn off the camera and I'm just going to play the earnings, and I could chat with you guys from my phone, from the chat room. So that's what we're going to do. Have you looked at VRUS? Let's take a look at VRUS. Might as well, since we still got half an hour to kill. Virus International. Nope, that's not it. What the hell? Ooh. It's a penny stock. This was a sub penny stock. See why you like it. Let's just do the math. Let's see. Oh man, if we pick that up at 0.002 cents all the way up to 1.8 cents, that's almost 1,000% in gains. So I can see why you like it. I also want to see the volatility of this company. Yeah, that's crazy. So this company has been on a downfall pretty much its whole life. Used to be $200 a share at one point. Had a huge sell-off. Its whole life it's been on the downfall. Most recently, it was at a sub penny stock range, and now it's a penny stock. This is definitely a chart that usually I get turned off by because of the lifetime of the chart. You see how it's just been downtrending its whole life, has some huge spikes, downtrend. Right now we're having a nice spike, might continue to downtrend. I'm not saying it's guaranteed, it's just a lot of risk involved with these penny stocks. It does look fairly valued. 2.2, 2.6, 2.1 price to revenue. Total assets 1.6 million, market cap 15.4 million. Super high risk, a lot of potential. Like literally in the past, if you pick this up in February and held until April, you'd be sitting in over almost 1,000% in gains, or maybe more. I would have to do the math. I'm just doing the math off the top of my head. So high risk, potential for very high reward, but in the long term, it's definitely very risky because in the long term, the only thing we've seen with this company is a downfall. So definitely invest at your own risk, especially with penny stocks, and then sub penny stocks, even more riskier. Um, Check out CNBC website when you get time. What's going on with CNBC website? You could who let the dogs out? Oh man. Yesterday we had a nice little time waiting for those earnings. In MedMan too, a lot of pain lately, but I'm gonna hold it out. See a big future. I'm also holding on to MedMan, but I already collected some profits, so at this point I'm holding on to a core position with MedMan. But yeah, let's check out what's going on. Patty, is that are you saying like yo, or is that a ticker symbol? Why yo? What's a classic pump and dump? CRNE. I'm gonna look at CRNE. What do you think is a classic pump and dump? Oh, I need to wake up. That, or I need a nap. Can't wait for these earnings so I could just lay down and listen to it. CRNE. $4.02. This is a biotechnology and medical research company. Currently, I want to see okay, so price to revenue 22, price to sales 22. You know what? That's not bad for a medical company. Total assets 624 million, market cap 466 million. So it has more assets versus its market cap, which is good. We seem to have a support here at around $2, $1.90. I would say I'll just say it's at $2. We have a support. I'm not gonna draw lines. We have another, you know what, I am going to draw lines. Why not? This was acting as a previous support right here at around $4.10. You can see it acted as a support. And it's currently acting as a resistance here. And then we have another support here at around $2. Honestly, it doesn't look really bad, but it does look a little overvalued. Technical analysis says that it's a buy, a strong buy and a neutral. 1 minute says it's a buy and a strong buy. Oh, the sub penny you analyzed. Yeah, I tend to stay away from sub penny stocks. That was a yes to your question. I don't know why it didn't show that message. Getting a golden cross on the daily. What do you mean getting a golden cross? So we have 23 minutes till these earning calls. You need to look at a daily chart. I look at a little bit of everything. I'm looking at the monthly chart mostly because I want to see the lifetime of this company. And I don't know what's going on here, but it says that at one point this was valued at $715. I don't know if they just did stock split or what's going on. But I normally do look at the daily, the 1 hour charts, even the 5 minute charts if I have to. But I see what you're saying here. So I think, was that the resistance? No, I said the resistance, the support was at $2. So either way, it's the same thing. Support at $2 right here. My line didn't draw. It's all good. We can look at the next company. Let's see how Aurora Cannabis is doing. I mean, they're still above $8. That's the only positive I could see out of the being down 1.43%. I think investors might just be waiting for these earning calls. I mean, I did say to click the like button a bunch of times, but no problem. I won't spam you guys to click the like button, but while we're at it, I'm joking. Death cross is the opposite. 200 crossing to the 50 downside. You guys want to make good quick bucks. Swing trade beyond every day. Huge moves every day since IPO. Which company are you talking about, Remy? Oh, swing trade BYND. Okay, so Remy says if you want to make quick bucks, swing trade BYND every day. We're gonna take a look at BYND on Beyond Meat. I would never expect a meat company to be a good swing trade company. It's a food processing company. It's too. I feel like this company just IPO'd on May. I think this company is way too fresh to know whether it's a good swing trading company. Like literally, we had one swing upwards, 2 swings. We had a swing from $64 to $79. I mean, you might have a point. I don't know if we're talking about the same company here. BYND. I mean, I guess it's a fairly new company though. But let's say we were to swing trade it. I'll keep an eye out on it. I'll mark a support line here at 65. And I'll test it. I'll see if it bounces off. I'm not gonna buy into it right away, but I'll watch it. I mean, according to technical analysis, this is a strong buy. Strong buy, strong buy. 1 minute sell buy, strong buy. And then I'll say we have a support here, a resistance here at $80. But I feel like this is too fresh of an IPO. I mean, you could be right. I'm not gonna lie. Anything's possible. But it's a fairly new IPO. And it's skyrocketed since IPO. It went all the way from $45 to $85. Almost doubled in price. So almost up 100% in like 3 days. Let's look at them on paper. Price to revenue 52, price to sales 52. Total assets 133 million, market cap 4.6 billion. I'll definitely keep an eye out on it. Get in on the dip in the morning and get out the high. Every day it takes a huge dive that runs up. Let's look at the 5-minute charts. So today is the 15th. It had it did have a dip down to $75. Had a run up to 80. Look at yesterday. Yesterday, no dip, just a straight run up. I mean, that's true. In the morning, they do have nice runs in the morning. Had a nice run yesterday morning. I'll keep an eye out on it. It's too fresh of an IPO for me to know. But thanks for the stock. I'll definitely keep added. It's already added to my watch list, so we'll be taking a look at it. We have 28 more minutes, 18 more minutes till the markets. I mean, till the earnings call. If you guys have any requests, let me know. Raymond F. Connors, you're welcome. I forgot to say that. I'd like to say thank you for not saying click the like. Might as well though. Smash that like button. Let's see how many likes we got. 60 likes. We're getting there. Let's try to get to 100 likes before this live stream ends. Of course, we are gonna be here probably for another long hour. It's 10:13. Oh man, I hope these earnings calls start exactly at 10:30 a.m. like announced here. So should be getting a notification for it anytime soon. Audience members may arrive 15 minutes in advance. So that's what we're gonna wait for. It's what we're waiting for. Why do you like Parcel Pal so much? I did make a video about it, and I think it's a lot to explain, but I'm gonna have to make a video about it if you guys want me to. I think if I do buy more shares, meaning if it drops more, I could tell you I'll make a video about it. I'm just super not feeling energy, a lot of energy right now. PKG. I just did some research on it, and I just liked what I found. So, and it is let's see how long this company's been around. It's been around for quite some time, but its whole lifetime this company has been uptrending. Of course, it started off as a penny stock at around 1 cent. Now we're at 27 cents. It's been consistently uptrending. On top of that, it's kind of reminds me of, I'm not comparing it to Amazon, but it kind of reminds me of like the Amazon for the cannabis industry, because I do think eventually cannabis will be delivered, and Parcel Pal will be a company that will be doing that. But like I said, it's a lot to explain. I'm a little tired right now, but I'll definitely be making a video on that. Hopefully one day soon when I find the time to do it. PDSBIS is up 50%. So we got a hot company right here. PDS. I already forgot the symbol. That's how tired. PDSBIS. Can't find it. I can find PDS, but not PDSBIS. PDS, yep, I'm doing it right. So you guys are gonna have to give me a ticker symbol that will work, because I can't find it on tradingview.com. Wow, I can't believe it. It's been 1 hour and 30 minutes almost. We've been live streaming. I think these earnings call, yes, we are almost ready. Oh, no. Got the classical music. We're on standby right now. So we're just about ready for this earnings call. Oh. It's been a nice long wait, guys. Once again, guys, don't forget, smash that like button. Hopefully we hear some good stuff. And Aurora Cannabis shares right now currently down 1.31%. I'm going to pull up the ACB charts. ACB. Let's pull out the American charts, since we have most likely more American friends than we do Canadian. I'm going to pull up the 1 minute charts so we could keep a close eye out on these. Oh no, that's Parcel Pal. What am I doing? ACB. We had a very volatile morning. Morning was crazy. Had that huge gap down. Immediately got filled. Seemed to be uptrending throughout the day, but these are the 1 minute charts. We will most likely be seeing some volatility, but let's see if we can continue this pattern throughout the day. That would be nice to see, because we do seem to be making higher highs, higher lows. Or we could potentially be seeing a triangle pattern. It's maybe a little too early to tell right now. But if that is the case, what happens with triangles, I've explained this time and time again, is if we continue to squeeze into this triangle, what eventually happens is we have a breakthrough. So we're going to have a breakthrough in the upward or downward direction. Of course, the bulls will hope that it breaks through in the upward direction. The bears will hope it breaks through in the downward direction. But as of now, it kind of does look like a triangle pattern is forming. So 12 minutes, at least it looks like Aurora's prepared for this. I should probably keep the volume up a little just so we can make sure that we're ready once they start talking. Unfortunately, there will be no DJ requests today. My video from yesterday got demonetized because of some of the songs we played. I think it was someone who requested a Biggie Small song yesterday, and it got my video demonetized. Someone requested I don't know if it was Baby Got Back, got demonetized because of that. So it's okay, it was still fun. But I ended up removing the song, so thank God for technology. So we have 11 more minutes. Hopefully these earnings start right when they tell us it's gonna start. What are you guys expecting from these earnings? And Aurora Cannabis is doing good. Wow. Wow. 831. We're only down 0.84%. Maybe I might put this triangle up a little higher. It looks more like it. Unless it continues to push forward, then that's your breakthrough. But as of now, it does look like Aurora Cannabis is uptrending. Oh, PTSB. Okay, let's do PTSB. In the meantime, we have 10 minutes to kill. PDSB. Biotechnology Corporation. I think did you call this out in the morning? You said it was up 50%. So you were probably right when it was up here. $9.15. Is that today? No. That has to, yeah, it is today. Wow. So yeah, this company made a huge run today, up 35.9%. Are you holding this company, or are you just watching it? New info on relationships. What is the new info? PUSYX. Someone YouTube held this message for review, probably thinking you were saying something else, but we could definitely look at PUSYX. And Aurora Cannabis is pushing forward, currently down 0.36%. So it looks like we're about to go in the green soon. There's no ticker symbol for PUS pussy for pussy. Pussix. Imagine there is a ticker symbol for oh man, I don't know if you're trolling me or was that actually a request. So yeah, Aurora Cannabis is now only down 4 cents. Not bad at all. A big is sidestepping. Yeah, very volatile. Was up 50%. No, I'm not holding PDSB. I'm in and out twice now. Oh, look at you, man. You asked the question, what do you hope comes from this call? Oh, okay. So what you hope is new info on relationships. That's good. ACB is sidestepping. ACB is doing good. We're now only down 0.12%. So this might have been the breakthrough, is it? Because we did see a triangle pattern, and now I'm not sure if it's breaking through. I mean, well, no, we can't really squeeze it in anymore. That's as tight as we could squeeze it. So ACB is about to be green. One more penny and we're even. 2 more cents and we're finally green on the day, right before earnings call. A biggest sidestepping. Who's sidestepping? Oh no. Oh, whoa. Look at that. We had that breakthrough. We had it. I mean, I was expecting it to squeeze more in this triangle before we had a breakthrough, but in a way, this pattern did do exactly what I thought it would. We had a triangle pattern. Now we have a breakthrough. Aurora just broke through in the upward direction, as you can see right here. Currently green now. Aurora Cannabis is officially green right before the earnings call. So this looks like who knows, it might be a false alarm. Let's not get too excited yet. Pull back. Oh god, never mind. It's pushing. It's pushing. So yeah, we definitely had that breakthrough. Triangle pattern forming, boom, breakthrough. But we also had a couple, but this is the 1 minute charts. Let's look at the 5 minute charts. So we see some gaps there. If we look at the 5 minute charts, no gaps. You will always see gaps in the 1 minute chart. It doesn't even look like a triangle in the 5 minute. That looks ugly. That looks better, more appealing. Traders waiting for ACB numbers. I agree. Traders also seem to be very confident. Or I don't know how many swing traders are I'm pretty sure Aurora has a lot of swing traders, and maybe a lot of people noticed this triangle pattern, so started betting on the breakthrough in the upward direction. Because that's what happens with a lot of traders. When they see a triangle pattern forming, they usually start a position with a stop loss. So if it got tighter in here, I probably would have set a stop loss at around 825. And maybe a lot of traders saw this pattern forming, and boom, we have a breakthrough in the upward direction now, which is really great to see. And I'm just glad I called out that triangle pattern, and then we actually seen a breakthrough live. So that's great. Definitely broke above that triangle pattern. At this point, let's see what else is going on in these charts. Are we approaching a resistance? Let's look at the 1 month chart. Oh, what am I doing? We are approaching small resistance here at $8.50. Let's see if we break above 850. I would love to see that. I'm just gonna draw a line at 850. See if we can break above this. Well, it's a little lower, I guess. 848. One obstacle at a time. Nope, and it doesn't seem like it. So I want to actually take a look at the rest of the sector, because right now it seems to be like a few companies are in the green now. So Nasdaq is just went in the green. Russell 2000 was in the green, now they're in the red. But on the bright side, Nasdaq is in the green. S&P 500 is about to get green. So it looks like overall the whole market is getting green. Dow is still down 61 points. So on the bright side, Nasdaq's in the green. So it might not just be Aurora in the green. We might have something going on. BYND just had 3 major artists invest with them. I believe J and B along with someone else. So Jay-Z and Beyonce. BYND. We'll definitely keep an eye out on that. I'll look at it in a minute. This would be a good time for ACB to announce some news other than numbers, don't you think? It would. Imagine they announced that they had a partnership. Not a big one, but multiple ones. That's cool news for BYNB. Yeah, that's really good news. BYND. I'll definitely spies in the green. Trump made a comment to auto tariffs. That's why it's green. Thanks for. I had a feeling something was going on because the fact that just like that things turn around. But I want to take a look at BYND because apparently, according to Lost, they just had 3 major artists invest with them: Jay-Z, Beyonce, along with someone else. So let's take a look at BYND. BYND. And then it's 1 minute till 10:30. So hopefully these earnings call, Aurora Cannabis is most likely gonna be late. So currently up 4%. Oh, this is the company you just spoke about, Beyond Meat. Oh, and now look at that. They had a nice little run. And I just marked that as a resistance line. So they just broke above resistance today, just now. Tim Hortons to test Beyond Meat sausages. Burger King plans big expansion. Tim Hortons is testing Beyond Meat's fake sausage on its menu. No, that's not good. Fake sausage? What kind of... I would have to do more research in this. This is nut loaf. Will Beyond Meat crash? I would have to know more about this company. Like, I don't like the idea of fake meat or fake sausages being served to me, unless it's like it's fake sausage because it's vegetables and not meat. But maybe you know more about that. That is why it's green. Can you post phone in link? Can you post phone in link? Whose phone? Whose phone do you want in the link? I have the call, the earnings call. I don't know if you'll be able to watch it. I could definitely post the earnings call on the link. Just hit 83. Yeah, I know. I just saw it. Beyond Meat hit $83. I think that's their all-time high. Literally at the top of the 52-week range. I'll be cute. Oh no, it's not. It's not. It went as high as 86 before, I think. I mean, I'm not seeing any news on Beyonce and Jay-Z. Beyond Meat stocks popped 11%. I'll definitely be doing some more research on this company. Maybe I'll make a video about it. Maybe. I don't want to make a promise. But as of now...
Good morning, everyone.
Oh.
Welcome to the Aurora Cannabis third quarter fiscal 2019 conference call for the 3 months ending March 31st, 2019. During today's call, Aurora will be referring to an earnings presentation, which listeners are encouraged to download from the financial report section of the company's investor website, investor.auroramj.com. Listeners are reminded that certain matters discussed in today's conference call, or answers that may be given to questions asked, could constitute forward-looking statements that are subject to the risks and uncertainties relating to Aurora's future financial or business performance. Actual results could differ materially from those anticipated in these forward-looking statements. The risk factors that may affect results are detailed in Aurora's annual information form and other periodic filings and registration statements. These documents may be accessed via SEDAR and EDGAR databases. I would like to remind everyone that this call is being recorded today, Wednesday, May 15th, 2019. I would now like to introduce Mr. Cam Badley, Chief Corporate Officer of Aurora Cannabis. Please go ahead, Mr. Badley.
Thank you, Chris. Good morning, everyone, and thank you for joining today's conference call. It's a beautiful sunny day in New York. With me are Terry Booth, our Chief Executive Officer, Glenn Ibbott, our Chief Financial Officer, and our Executive Chairman, Michael Singer. For today's call, I'll start by discussing some of our operational highlights of the past quarter, and then Glenn will discuss the financials. I'll then briefly return to present our outlook for the rest of the year and beyond, and then we'll take your questions. As we do each quarter, I'm going to start with a few ad hoc observations to frame the conversation, then proceed to the formal comments. Now, our operator Chris mentioned that a short earnings call presentation is now available in a financial section of our investor website, investor.auroramj.com. And I'd like to draw your attention to something new we've developed on slide 3. It's a dashboard of key performance indicators. They really tell the story of our solid performance during the quarter, but more importantly, they make it very clear where we're headed, including our path to profitability. So for those of you who can see it, and even for those who don't, I'm just going to run through very quickly 9 of these key performance indicators that we brought together to simplify and clarify the snapshot of where we are. And they include some very important results for us in the quarter, including growth across all distribution channels. So our consumer cannabis revenue in Canada, up 37%. Our medical cannabis revenue in Canada, up 8%. And our international medical cannabis revenue, up 38%. And that all averaged out to 20% quarter-over-quarter growth. On the next line, you'll see our cash cost to produce per gram came down significantly from $1.92 to $1.42. So that's down 26%. We knew this was coming. We knew that that would result from the scale, efficiency, and technology of Aurora Sky, but it's very gratifying to see. The next point you'll see is that our average net selling price per gram is actually a little bit down. It's the only one of these key performance indicators that we've marked as yellow rather than green. And so our average net selling price per gram came down about 6% over the quarter. And the reason for that, we'll go into more detail later, is essentially that we haven't had the time to scale up or at least we didn't early in the quarter. We hadn't had time to scale up our derivatives production. And the reason it's yellow rather than red is because we've already got the indicators that that'll be turning around in this quarter. Our gross margin is up, a small amount, 1%, but our gross margin on cannabis revenue is up, and we're very, very proud of that. We have always emphasized our gross margins. We will continue to do so. And then also our active registered patients is quite notable because that was up 5% in the quarter to 77,000, and it's up another 7 or 8% since then. That's significant because some companies in the sector have been indicating that they've seen softening demand on the medical side. We have not seen that. In fact, we've been managing it very, very carefully so that we don't add too many patients. Now we've got the production, we can continue to increase that. And then the last 2 key performance indicators I want you to focus on are kilograms produced and SG&A, because they really tell the story of our pathway to profitability. We doubled our production. It's up 99% quarter over quarter to over 15,000 kilograms. And the other critical key performance indicator here is our SG&A, up only 1%. And this is further to the commitment that we made in January, that we were shifting gears and focusing on disciplined execution and cost management to ensure that that pathway to profitability comes to reality. So I'm happy to say that we are still tracking for positive EBITDA in this quarter. So the snapshot here before we move on to the formal comments is industry-leading production and production efficiency, industry-leading gross margins, industry-leading product quality, yields, and no crop loss, industry-leading global footprint, and unparalleled technology. In this phase of the sector's development, I would say absolutely that the number one critical success factor is the ability to produce and sell an enormous volume of cannabis, and we have got that in spades. All right, and now on to the formal comments. Looking back at the first 3 quarters of our financial year, we're very pleased with the progress we've made. We've consistently executed on our growth and expansion strategy, resulting in continued revenue growth while improving efficiencies and scale to drive margin improvement. We're proud of this progress and very pleased that while many in this sector are still trying to decide how to build their cannabis business, we have already successfully built a strong and thriving business with solid fundamentals that's positioned as a global leader. Now, let's look at our achievements in the third quarter. Our net revenue was $65.1 million, a 20% increase over $54.2 million in the second quarter. We produced almost 16,000 kilos of cannabis, double the volume compared to the previous quarter. With Aurora Sky ramping up very successfully, Our cash cost to produce per gram fell by 26%, while SG&A costs were relatively flat over the same period due to disciplined cost management. In the quarter, Aurora continued to be a solid performer in the Canadian consumer market with leading market share and high brand awareness. Our consumer revenue has continued to exceed our expectations. We achieved 37% growth compared to Q2. While increased production was a fundamental driver of growth, I think it's important to understand how well our products perform in terms of brand resonance. An analysis of over 6,000 reviews on Lyft.com conducted by a covering analyst showed how well the Aurora brands perform in this respect. 2 of the top 3 most highly regarded brands were ours, with all our brands in the top 11. While in an undersupplied market, the ability to produce remains king, longer term, we know the brand strength will play a key role in capturing and keeping market share. And going by these numbers, we're very well positioned in the consumer market. We are also looking forward to an improved retail infrastructure across Canada, which will further increase consumer engagement. There's still many consumers that have yet to purchase their cannabis legally. Furthermore, people who do not transact in the illegal market but are interested in cannabis appear not to be engaged because of the reported shortages and the currently underdeveloped physical retail infrastructure. The launch of brick and mortar stores in Ontario is a great step forward in this regard, and with increasing supply, we will see a growing network of retail stores. In this respect, I'd like to mention our partner Alcanna, who recently opened another of its beautiful Nova Cannabis dispensaries at 499 Queen Street West in Toronto. Sorry for the advertisement, not really. In general, in line with what has happened in other consumer jurisdictions, a well-developed physical retail network should result in strong growth. While we perform very well in the consumer market, medical cannabis remains the cornerstone of Aurora's identity. In the last quarter, we undertook many initiatives to strengthen our leadership position in this segment, both nationally and internationally. Some have suggested that legalization of consumer cannabis in Canada would result in a drop-off in the number of patients buying in the medical system, as people would head to stores to self-medicate. In our experience, nothing is further from the truth. Every day, the number of global physicians prescribing cannabis to address real medical issues, from PTSD to palliative care, is growing. Many of these patients would only seek treatment through traditional channels, such as their trusted family doctor or clinic, rather than seeking advice in a dispensary. In addition, through the medical channel, patients can seek reimbursement for their expenses through tax reduction and an increasing number of companies, including medical cannabis, in their benefits policies. So, despite the introduction of consumer legalization, we continue to experience growth in our patient numbers, up 5% this quarter to over 77,000. As of yesterday, our patient numbers in Canada have increased even further to 82,745, in line with our production acceleration toward the end of the quarter and into Q4. Additionally, 3 of our brands were included in the Shoppers Drug Mart online marketplace for medical cannabis, which opened this past January. In the quarter, we also introduced product identification numbers, or PINs, to 78 of our medical cannabis products to make it easier for patients to apply for reimbursement under health insurance plans. We are recognized as a leader in medical cannabis. This is not just due to the high and consistent quality of our products provided by our 3 medical brands, but also because, as an organization, we are integrated throughout the value chain to advance medical knowledge, to support physicians and other health practitioners, and to service our patients with excellent products, customer care, and information. To our knowledge, we have the broadest medical research program in the industry, with over 40 clinical trials and medical case studies underway and completed. This creates incredible brand strength with physicians worldwide, who are still the key drivers of growth for the medical sector. We own Cannabis RX, which provides critical services to both patients and physicians looking to understand medical cannabis and its uses. We engage with health authorities internationally, with physician networks, and with pharmacies. It is this rigor in our medical cannabis program that has enabled us to grow our presence in the medical cannabis markets, both domestically and globally. Currently, we are present in 24 countries on 5 continents. This past February, we added to our European presence with the purchase of a 51% ownership interest in Gaia Farm. Renamed Aurora Portugal, this new division has received permission from the Portuguese Health Ministry to construct an EU GMP, European Union Good Manufacturing Practices, compliant cannabis cultivation facility. The first phase of the facility is expected to be complete in Q3 2020 and will have a capacity of 2,000 kilograms per year, with a further 2,000 kilos coming on when the second phase is complete. Another significant advancement in Europe was our win in the recent public tender competition in Germany to cultivate and distribute medical cannabis. Aurora was one of the 3 winners in the competition, which was judged based on the design, quality, security, and logistics of the growing facility. Of the 79 applicants, we received the highest ranking and won the maximum number of lots in the tender. The lots will allow us to provide a minimum supply of 4,000 kilograms of medical cannabis over a 4-year period. We will start constructing this month and expect to ship cannabis from the facility starting October 2020. We are very pleased with this win, which solidifies our leadership position in Germany and reflects our industry-leading facility design. This was an important skill that we developed early on with our acquisition of the facility design business Larson in 2017. While the quantities of the tender are very much smaller than what we anticipate the size of the German medical cannabis will grow to, it is a critical win that will strengthen our brand in the local market, as well as throughout the rest of Europe. Another development strengthening our brand in Germany is the introduction of full-spectrum extracts. Here too, we've established early mover advantage and are developing the market. As an aside, using the Canadian medical market as a proxy for how other international markets will develop, this provides a good indication of the scale of the opportunity we're pursuing. In Canada, we already have over 1% of the population registered in the medical system. Translating this to the international markets, in which we have very strong first and early mover advantage, it's clear to see that very substantial additional capacity is needed. Hence, our upscaling of Aurora Sun in Medicine Hat and the construction of Aurora Nordic in Denmark. With scientific studies increasingly augmenting word of mouth and anecdotal evidence, we think it's fair to assume that destigmatization of cannabis and adoption by physicians will follow an accelerated curve in comparison to Canada. Work is to be done to develop these markets, obviously, and for now, they remain supply restricted. But the opportunity is there, and we are executing extremely well in this regard. In terms of our production facilities, in the third quarter, both MedReleaf Bradford and Aurora Sky in Edmonton were fully licensed by Health Canada. Bradford is now fully planted and provides a production capacity of 28,000 kilos of premium hang-dried and hand-manicured cannabis. Aurora Sky is, we believe, the single most advanced cannabis cultivation facility in the world. The 800,000 square foot facility has a production capacity in excess of 100,000 kilos annually. Sky, a massive closed system indoor facility with a glass roof, deploys state-of-the-art technology that produces cannabis of high and consistent quality while benefiting from a high degree of automation to increase efficiency. This means target production costs of less than $1 per gram. Sky is now fully planted and successfully ramping up to maximum capacity. The increase in production seen in Q3 over Q2 will continue with increased product availability for sale in Q4. At Aurora Sun in Medicine Hat, our newest and most evolved Sky Class facility, construction is progressing very well, with the erection of the metal structure and glass installation almost complete. The design of Aurora Sun includes a number of technology advances as compared even to Aurora Sky, and will further improve our economic efficiencies. As I mentioned, we announced an upscaling of Aurora Sun in the quarter. The facility will now measure 1.6 million square feet, and with Sky Class efficiencies is targeted to produce over 230,000 kilograms per annum. Sun also represents an advance in our production process, with the facility focused solely on high-efficient production, with the dry cannabis shipped to other facilities for further processing. In February, we announced a new facility, Aurora Polaris, that will focus on post-harvest processing. Strategically located adjacent to Aurora Sky in Edmonton, Polaris will be EU GMP compliant and serve as our center of excellence for the production of high-margin, value-added products such as edibles. Our product development team, in collaboration with our market development specialists and internal market forecasters, have identified those products that we anticipate will sell best and have the best margins. These products include edibles such as hard baked goods, chocolates, mints, as well as vape products, cosmetics, and soft gels that we will produce at Polaris. Products such as infused beverages are also under development, but considering the anticipated relatively low market share of these products, we're not rushing this, as we'd rather get it right than get there fast launching a product with limited market resonance. Leveraging its proximity to the Edmonton International Airport, Polaris will also serve as a domestic and international logistics and warehousing hub. Polaris is expected to be completed by the end of this year. In the interim, in anticipation of new regulations permitting these new products, we are installing production lines at our other licensed facilities to ensure that we will exceed market demand with a broad complement of products and not have the level of shortages that the industry experienced on October 17th of last year. Polaris demonstrates the scale that we've achieved in our operations. We're not a cottage industry, but rather a pharmaceutical level industrialized operation that requires complex systems to drive operational efficiencies, consistent high quality output, and product innovation. You've heard today the advances that we've achieved in the consumer and the medical business, both domestically and internationally. Polaris will help us institutionalize our innovation and our innovation culture and maintain our global leadership. Now, Glenn will discuss the financial highlights of the third quarter. And over to you, Glenn.
Thanks, Cam, and good morning, everyone. Aurora's financial performance in the third quarter of fiscal 2019 reflected our continued robust execution across all market segments, as Cam just described. Our net revenue increased to $65.1 million for the quarter, compared to $54.2 million in the second quarter of fiscal 2019, and just $16.1 million in the comparative period last year. Of this, cannabis revenue was $58.7 million, a 23% sequential growth across all three market segments, but driven largely by a 37% increase in consumer market cannabis sales. Underlying this growth was the increased production that Cam discussed from Aurora Sky and our Bradford facility. Medical cannabis sales in Canada grew by 8%, or $1.9 million, as a result of continued growth of our patient base. As Cam indicated, we continue to support the growth of the Canadian medical market, and in line with our patient-first culture, have increased availability of the medication that patients need. We continue to take the position that medical cannabis, like all prescription drugs, should not be subject to excise tax. For that reason, we continue to absorb the cost of the tax for our patients. This negatively affected our revenue in the quarter by $3 million, or 5%. Extracts represented about 18% of cannabis revenue in Q3, compared to 22% last quarter. Our oil extraction facilities have been operating at a maximum capacity for the past 2 quarters, and as a consequence, the relative contribution from extracts fell slightly as our total revenues grew. During the quarter, we installed additional extraction capacity at some of our facilities, and that capacity is now online. Furthermore, our extraction partner, Radiant Technologies, has now entered commercial operations, which we anticipate will start making a noticeable contribution from the end of Q4 onwards. Finally, installation of N-Wave's rapid, low-temperature drying technology at our Aurora Sky and Sun facilities will increase speed of extraction in future quarters, taking it from a matter of weeks down to a day. The average net selling price of cannabis decreased to $6.40 in Q3. This was partially a result of product mix, as we recorded a 48% increase in dried cannabis sales into the consumer market, which has a lower wholesale pricing structure. The ASP was also impacted by the first full quarter of excise taxes on medical cannabis, which Aurora absorbs. And finally, and most importantly, the relative decrease in contribution to revenues from extracts impacted the average selling price as well. Going forward, with significant additional extraction capacity coming online internally as well as from Radiant, we anticipate the relative contribution from higher selling price products to increase towards the end of the current quarter. A significant improvement in our cash cost to produce cannabis more than offset the decrease in average selling price. As Cam noted, it's a key driver of our financial performance, and the cost to produce was down 50 cents from last quarter, 26%, to $1.42 per gram in Q3. The result of increased production coming out of Sky and Bradford, creating significant economies of scale, and it was also a result of a reduction in the temporary labor that we had employed to prepare for the commencement of consumer sales in Canada. We expect production costs to continue to go down as Aurora Sky produces at full capacity in Q4 2019 and Q1 2020, and reiterate our expectation that production costs will be well below $1 per gram. So, tying all of this together, in Q3, our consolidated gross margin was 56%, up slightly from Q2 of this year. This reflected the improvement in our cash costs, offset by a lower percentage of extract sales and the increase in the consumer market sales. We expect gross margins will continue to improve as we introduce new product lines, expand our extraction capacity, and increase international sales. All of that combined with our continued improvement in production efficiency. Cannabis production in the quarter increased by almost 100% to 15,590 kilograms, driven mainly by the ramp-up in production at Sky and Bradford. Much of this production increase came towards the end of the quarter. At March 31st, we had WIP inventory exceeding $45 million in fair value, which reflects the significant harvests during March. A few more words on our ramp-up at Sky. In order to reach the 100,000 kilogram production capacity, two parameters are critical: the frequency of harvests and the yield per harvest. I'm pleased to note that the frequency is nearing our target rate. Sky is reaching a real cadence in production. This means that we will comfortably reach the stated capacity of more than 100,000 kilograms per annum harvest rate in the first quarter of the new fiscal year. I should also note that the yield per harvest has actually been substantially above target. The average of the last 10 harvests there has been more than 20% above our targeted yields. With the successful ramp-up of Bradford and increasing production yields across our other facilities, we anticipate harvesting at a rate in excess of 150,000 kilograms per annum by the first quarter of our fiscal 2020. On a planted rooms basis, our capacity already exceeds 150,000 kilograms per annum. For Q4, we expect to have over 25,000 kilograms of cannabis harvested and dried. With the implementation of new regulations permitting the sale of a broader portfolio of derivative products later this year, we are planning to allocate a sizable fraction of this production to inventory for further processing to ensure we'll have a broad portfolio of new products in sufficient quantities available for sale when the higher margin products will be permissible in Canada. Over the past several quarters, we have invested significantly in building out the talent and the infrastructure to lead the Canadian and international cannabis industry. Now, much of that infrastructure is in place and ready to support our growth. In Q3, SG&A costs grew by 1% compared to Q2 of this year. Within SG&A, sales and marketing actually decreased 28%, as the reduction in Pre-Cannabis Act spending was partially offset by higher shipping costs, which are related to our increased sales volumes, and an increase in sales representative headcount. For G&A, while we saw a 16% increase, greater than 6% of this was due to a new Health Canada cost recovery fee, which is calculated at 2.3% of sales. Q3 2019 G&A also reflected the first full quarter of ICC integration and a partial quarter of Whistler costs. Going forward, we anticipate SG&A to show increases in line with the growth of the organization, but certainly at a rate significantly lower than our anticipated revenue growth. In Q3 2019, our adjusted EBITDA loss decreased by 20% in the quarter to $36.6 million from the $45.5 million in Q2. I should note that we have defined adjusted EBITDA in our Q3 2019 MD&A. Through the combination of substantial revenue growth, a declining unit cost of production, increased availability of higher margin derivative products, increased shipments to the EU, and ongoing disciplined operating cost management, Aurora continues to track towards achieving positive EBITDA beginning in this current fiscal Q4 2019. Our financial position remains solid. At March 31st, we had almost $350 million in accessible cash and over $70 million in accounts receivable. This compares to about $75 million in cash and $15 million of AR at June 30th, 2018. The increases are largely due to draws on the BMO-led credit facility, the issuance of senior secured notes in January 2019, and the increased level of sales in our business. In addition, we recently completed the filing of a base shelf prospectus and ATM supplement, a long-term strategic measure that provides the flexibility to access growth capital if or when required to provide the gas to continue executing on our global expansion and partnering strategy. We implemented this base shelf prospectus and ATM supplement as part of a prudent, maturing capital structure and normal part of house cleaning as we filed our Q3 results. In conclusion, I'm very proud of the team at Aurora. Kudos to all for delivering yet another strong quarter. We continue to post stronger fundamentals each quarter, expect significant growth, and are financially healthy. We are executing our growth strategy, and consequently, I believe we are very well positioned to further strengthen our position as a clear leader in the global cannabis industry. I'll now pass the call back to Cam.
Thank you, Glenn. And as you've heard today, we built an extremely strong platform for growth that's generating continuing solid results. We have several initiatives in place that will drive further growth and further secure our leadership globally. Now, let's look at a few. One exciting development has been the appointment of Nelson Peltz as our strategic advisor. Nelson has a decades-long track record of building businesses and generating exceptional shareholder value and has deep experience in the consumer products business. We are working with him on multiple initiatives, including our partnership strategy. As we communicated at the time, our partnership strategy is differentiated. We do not believe that a change of control transaction at this point, with so much growth still to come, is in the best interest of our shareholders. Rather, we are well positioned to explore the benefits of multiple partnerships across a variety of industry verticals. Nelson's experience and his connections in these areas will prove, we believe, very valuable in this respect. We are excited about the opportunities in the cannabis and also the hemp space globally, and we continue to explore multiple opportunities with Nelson. We don't want to put a timeline on things right now, but I want to stress that we are approaching this very strategically, methodically, and thoroughly. One important area of attention is the U.S., which appears to be moving toward a more open legalization, particularly in the areas of industrial hemp and CBD. We are assessing where in the value chain we'll be able to generate the most value. We're well positioned to pursue multiple angles through our deep research and product development capabilities, our regulatory expertise, as well as our extensive global hemp infrastructure, which we intend to expand through acquiring the shares in Hempco not already owned by Aurora. CBD for both medical and wellness applications has incredible potential, and we intend to fully leverage our capabilities, our infrastructure, and our partnership potential to maximize shareholder value creation. You can also look to us to continue to build on our leadership in Europe. In addition to our entry into Portugal and our recent tender wins in Germany, we recently have been selected as the exclusive supplier to the Luxembourg Health Ministry for medical cannabis. While this is admittedly a small country, Luxembourg has demonstrated that it is an innovator in cannabis legislation within Europe. For example, it's the first country in the European Union to propose legislation that would allow for the consumer use of cannabis. Our association with the Ministry of Health will help us be on the forefront of opportunities with them that could translate into further growth in other European countries as the market matures. As I said off the top of the call, while many in the industry are still evaluating how best to build their cannabis business, we have built a solid and rapidly growing business that is exceptionally well positioned to capitalize on the enormous global opportunities in cannabis. In fact, we've built a global leader. Our fundamentals are improving rapidly, and we have the know-how, the scale, the credibility, and the reach to execute. That concludes our prepared remarks, and now I'd like to ask our operator, Chris, to open the call for questions.
Certainly. At this time, in order to ask a question, press star followed by the number 1 on your telephone keypad. Again, that's star 1. I'll pause for just a moment to compile the Q&A roster. Your first question comes from Vivian Azer with Cohen and Company. Your line is open.
Hi, good morning.
Hi, Vivian.
So as we think about the capacity ramp and the expansion on Sun, Cam, I think it might be helpful just to revisit kind of the rationale for laying down, so much capacity. Certainly in the near term, the market is clearly very tight. One of your competitors extended their view of the supply and demand imbalance last night, saying 18 to 24 months. So a two-part question. Number one, kind of the longer-term rationale around building out all this capacity when ultimately we will go into an oversupply situation. And number two, if you could comment on your expectation for the switch to oversupply from a broader market perspective. Thanks.
Yeah, sure. So I'll start this off and then maybe hand off to both Terry and Glenn. Looking at our view of the need for capacity, first thing is that you're right. The market is undersupplied in Canada. And we see continued strong demand. We also were not necessarily in line with some people's expectations as to what max capacity will be, particularly given the advent of the new products as per the new regulations that will be coming out this year. So there's that. Second thing is, and we've said this before, the central fact of the global cannabis sector is a massive excess of demand over supply. And we know that we're going to have to supply a lot of international markets with product that we've cultivated in Canada. So that's why we're doing this. And also, we have a massive cost advantage here. And there are a lot of companies that are promising to have X capacity available in 12 or 18 or 24 months. We're delivering it now, but we're also delivering it incredibly economically. So we're going to have massive capacity to supply the Canadian market, to supply international markets, and we don't see any shortage anytime soon. Terry or Glenn, did you want to weigh in and add to that?
Sure. Thanks, Cam. I think I said last quarter that if there's one thing I lose sleep about is our ability to supply the global demand for cannabis. I now lose a little bit more sleep with my 2-week-old baby, but it is definitely something that still is at the top of our agenda, increasing our capacity to feed the globe's need. It took Canada 5 years to meet its demand with a population of 33 million. You just put that math into perspective with the EU, with Australia, Mexico, and other countries that are coming online, it would take literally 50 years to meet that demand. But we're not going to take that long because of the scale we're now able to build upon. The market is moving in a very, very fast pace. You're seeing what's happening in the United States with the Bank Safe Act, with the Farm Act, with the number of states that are now flipping over to medical and also taking on adult usage. There's no doubt in my mind the U.S. will be legalized in the next 3 to 5 years completely, probably at a state level. So those types of demands are there. The east coast of the USA does not have the grow capacity at this point that the West Coast has, add them all up. The demand will be significant for the product for many, many years to come.
That's helpful. Thanks. And just to follow up on the second part of the question, any view on when the Canadian marketplace might be able to produce enough supply to meet demand?
I'll answer that. That's a bit of a mug's game, Vivian, I think, is putting those estimates out there. I think anybody who tells you they know when the market will be properly supplied is probably pulling your leg. We've seen a lot of predictions not be correct. From our perspective, all we need to do is keep executing the way we are, and that's the way we look at it.
Okay, very helpful. Thank you.
Your next question is from Chris Carey with Bank of America Merrill Lynch. Your line is open.
Hi, thanks very much. I just wanted to start off, how are you? I have a near-term question and then sort of a more longer-term philosophical question. But on the near term, I think you said that you would anticipate that the 25,000 kilos that you would have available for sale would actually go for value-added product forms potentially later in the year. So would you anticipate growing sequentially from a kilogram sold standpoint in fiscal Q4 relative to fiscal Q3?
Oh, the answer is yes. I'm going to let Glenn go into more detail on this. Glenn?
Yeah, I think what we said, and hopefully it came through, I understand I'm coming through a little bit quietly on this, but we said that we would allocate a portion of that to inventory for the value-add products. Listen, what we're trying to do is learn from the challenges of the industry last year and the initial launch of consumer legalization, and we absolutely have to have sufficient inventory to launch these products properly. So if that means, taking a little bit of revenue out of Q4 and putting it into inventory into new products, then that's what we'll do. But the other part of this, Chris, is we have said today and in the past that we are tracking the EBITDA positive in Q4. So that does mean definitely, you can do the math. There has to be a significant increase in our sales and our volumes from Q3 to Q4. So we're going to trade those off and make sure that we're making the right decisions for the long-term future and the long-term value of the company to establish ourselves properly in the new product portion of the consumer market in Canada, but also to meet our commitments in terms of the EBITDA profitability. So you would expect to see continued significant growth on the revenue and volume sold in Q4.
Okay, makes sense. And then kind of longer term and somewhat connected to the prior question. So I guess based on what you put out there, you're going to get to roughly 400,000 kilos capacity in Canada over the next few years, potentially 40% plus minus of the total market. We'll see how things go with prevalence and new product forms. But when you think about that 400,000 kilos capacity, how do you think about the evolution of the ability to use international exports as a lever if you can't find a home for that much supply in Canada? So said another way, how quickly will some of these markets open, like Europe? Because even this quarter, kilos sold to Europe are still very small. So just how you see that evolution over time.
Yeah, well, I mean, the first thing to remember is that, Germany, for example, where most of our international medical cannabis sales have gone thus far, that's been constrained by supply. That market's been constrained by supply. And we're just at the point now, we're ramping up to the point where we'll have a lot more to sell into Europe. Now, how quickly will these markets develop? Well, that's an interesting question, and we're actually actively involved in sharing best practices with governments around the world so that we see truly accessible systems for patients and to help them accelerate development. I think it will happen very fast. Some markets more than others. But you take a look at Germany, for example, that's a really exciting market. We talked about Canada having more than 1% of the population with a script for medical cannabis. If we assume that that's going to happen in Europe, and probably faster, because most patients are getting insurance reimbursement, you're talking about, very short term to like 850,000 patients in that one country alone. So these markets are opening up so fast. I'll recall what Terry said, that our biggest nightmare is we just want to produce more cannabis and be able to supply these opportunities. So that's happening. Remember that when we emphasize we'll have about 400,000 kilograms of production in Canada, we don't see any constraints for years and years on the ability to export. And a lot of those export markets are premium priced. Europe, for example, we get the benefits of the currency differences.
Just to add to that, Cam, the German market is one thing. We know that that's going to real soon start to take traction as we actually are able to send pharmaceutical reps around educating physicians and having seminars, CME courses. But countries like Australia, where Cam did a great job of working with the government and cutting some red tape, literally went from less than 500 patients last year, this time, to well over 5,000 now. So that's a country that will be importing for some time. They have no production facilities. People have to recall, Canada's had production facilities for over 15 years, if we include the NMAR program. So as these countries scale up, we know the medicine is true. We know it. We believe in the medicine 100% in different product forms and different means of administration, and that's all coming online as this industry matures. This wave of cannabis required globally for medical purposes is significant, and getting into these countries as first mover medically will set ourselves up excellent for any adult usage plans with any other countries.
I also want to add to that. Something that's really important about Aurora is that from the very beginning, we've taken an approach of emphasizing purpose-built, highly economical facilities. And that's a critical part of this equation as well. There are a lot of companies that are producing or trying to produce cannabis in Canada. Not everybody is able to do so economically. We're doing so more and more so economically. So low cost and premium quality is a very neat trick to pull off. We're doing that. And I like where that positions us in the Canadian market as well on a go-forward basis.
Got it. Thank you very much.
Your next question is from Tammy Chen with BMO Capital. Your line is open.
Thanks. Hi, everyone. My first question is on this new potential accounting change, the IFRS 16. I'm just wondering, do you have a view on if that will have a material impact in the way you recognize your operating leases and how that could affect the potential change in how you would report your EBITDA going forward?
Glenn?
Yeah, Tammy. Yeah, of course. I mean, I'm not sure if everybody on the call is aware, but under IFRS, there's a new standard coming out for us in next fiscal year, so Q1 2020, that will require essentially most leases to be capitalized and then amortized or depreciated over time. So that will effectively move some operating costs off the P&L and into depreciation. Tammy, right now, I mean, we own pretty much all of our facilities. We do have some lease costs for some land at the Edmonton International Airport, and we do have office leases, and those are likely to end up as capital assets. So there will be some sort of an impact to EBITDA. I don't think it's as significant for us as it might be for some others that are leasing a lot of their facilities. So we'll see. That analysis is ongoing. It's a big project, as you might expect.
Okay, so that if you would adopt, that would happen in your new fiscal year. It wouldn't happen next quarter?
That's right, yes.
Okay, got it. And my second question is, I wanted to touch again on the more near-term, revenue outlook in the Canadian market. And I'm just trying to understand, from what you're seeing there, is there the ability to sell through materially into the current distribution channels in Canada as long as you've got the supply, or would you need to see a material ramp of new retail store openings across the country to absorb the level of volumes that you're speaking to in the fiscal Q4 quarter?
You know, the current infrastructure, everybody knows, is too small. But in addition to that, there hasn't been consistent supply. So what we've heard from some stores is, in different parts of the country, is that regular consumers know the day that new inventory is delivered, and they all descend on those stores at that time with great big lineups, and And as a result, the most in-demand products sometimes sell out in an hour or two. What that shows is that even within the current infrastructure, there is not the consistency of supply of the most desired product yet. Now, we also know that provinces are allowing for a ramp up of bricks and mortar stores. That's great. It'll add infrastructure. We also know that the regulations will be in place this year to allow for the new product forms. So you put that all together, and we're very confident that we'll continue to pursue or perform exceedingly well in the consumer system, and we think the consumer system will start to pick up speed and accelerate its growth. And then also, let's not forget the medical side. We anticipate continued demand in Canada for Aurora products and MedReleaf and CanaMed products in the medical system. The picture altogether, I think, for us is very, very favorable.
Okay, got it. And on that consistent supply point, if I can just squeeze in one more, is what sort of products are you seeing are the ones most in demand, and how's Aurora's product offering in comparison to that?
Well, you heard earlier in the call that our products are exceedingly highly ranked, all of them in the top 11. So, it's everything from certain kinds of dried flower. Connoisseurs really like certain flowers, to oils as well. It's also across not just THC, high THC, but also CBD products are very much in demand. So it's a pretty consistent picture across the board, and we anticipate that we'll see the same thing for our concentrates and edibles as well.
Got it. Okay, thank you.
Your next question is from Brett Hundley with Seaport Global. Your line is open.
Hi, this is Luke Berta on for Brett Hundley. First question. So we approach the legalization of value-added products inside Canada later this year. There seems to be an overwhelming focus on the beverage side of the market, as you noted, in part given strategic partners that are in place for a number of the Canadian LPs. And it's interesting because if you look at certain parts of the legal U.S. market, beverages have lagged behind considerably relative to vapes. Part of this is because the American beverage products don't have the R&D and marketing support that we presume Canadian beverage products will have. But we're also wondering if common consumer desires are being overlooked here, and whether or not the Canadian LPs and their partners are trying to force a square peg into a round hole. Can you talk a bit about your own views on how the value-added product market might develop inside Canada, and what kind of opportunity you see on the vape side?
Yes, I'll start, and then I'd like to hear from Terry on this as well. I don't want to be too much of a negative on beverages. It's just that we've made what we think is a pretty rational decision to focus our priorities in terms of the new product forms in areas where we know that there's strong demand, in part based on the model that we've seen in the U.S. consumer legal states, and where we believe that we can deliver something that's highly differentiated and good for consumers. And also where we think that we can generate the highest margins. Now, we said before, with respect to beverages, that may turn out to be a great market segment. It's not yet in the U.S. consumer legal states. As you point out, it's something like 2% or under of the market. And there are some good products out there that are well formulated. It's just that perhaps it's going to take a little bit of time and some marketing and some experience to change consumer tastes. Whereas, as you noted, vape pens are exceedingly popular, and they have rapid and high uptake. So we think that that's going to be a terrific market segment that doesn't need a lot of market development, that'll be pretty much ready-made. They're so discreet, you can stick them in your pocket, in your purse. They don't create smell, just a little bit of vapor. And I think that will be very attractive to new consumers who just want to try it out. What's all the fuss about? Let me try one of these vapes. So, we're focusing on what we think will be the best sectors or market segments for us with the highest margin and where the demand is already clear.
Right. The proven market is certainly not in beverage. And there are some big players in the United States. Heineken, for example, do have some brands in California. It's a very different effect when you drink an intoxicating cannabis beverage. It's not like alcohol. It doesn't lead to another and another. It's actually the more you have, the less you want in a very short amount of time once it starts taking its effect. It also has the potential if it doesn't have the rapid onset that we don't think it has, to have adverse effects over time. There are not going to be any cannabis bars like there are alcohol bars anytime soon. You mentioned that marketing in Canada, that's still not allowed, and it won't be allowed for beverages either, as far as we know. The gummies and the vapes, they're the best sellers. They're the best margins in the States. Certainly, if we're leaning towards any beverage, it would be on the wellness side of the fence, which we think that there's a tremendous market potential there. But on the intoxication side of the fence with respect to cannabis drinks, the market is just not there. It's not proven to be a popular item anywhere, and it's not able to market like typical beer companies or booze companies are allowed to market. So it's a small step for us, but certainly we're going to be focused on what we feel sells best and provides the best margin.
Thank you. And just one more for me. You've gone out and you've purchased Whistler. You also have an investment in T-God. It seems that you really believe in the forward market opportunity for organic cannabis. Do you see Aurora becoming a big player on this side of the market? And can you talk about the forward market opportunity overall, in your view?
I'll start and then pass this on to Terry. We see it obviously as a part of the picture, and so yes, there's going to be a segment of the market of consumers and patients who prefer an organic product. It's not necessarily the be all and end all. Organic has advantages and disadvantages. It's just another piece of the market to us. Terry?
Yeah, the organic market in cannabis is a popular one, as is the organic market in hemp. We have the largest organic producer of hemp under our wing now in Lithuania, Agripro and Borealis. So we know that there continues to be a move toward organic products in the cannabis space. Whistler has the very best, for sure, in the Canadian licensed producer space, and we'll wait and see how T-God execute on growing organic at scale. It is a difficult thing to do. We wish them the best of luck, and we do still have the right to 20% of their production supply. Where you run into some problems with organic is, of course, microbial. You have to watch the dirt very, very close. It's a growing and living, breathing medium that if it gets out of control, even a little bit, you can have crop loss. Whistler have been doing it for 5 years. They've eliminated crop loss over the years completely, and know what they're doing with respect to organic with smaller rooms. It also demands the highest price, which they've done a tremendous job with the provinces in maintaining. They're not going to drop their prices of their cannabis, and if you don't want it, you don't have to take it. But guess what? It flies off the shelves before everything else. So that we will watch, and we'll continue to increase organic supply if indeed organics are the way to go. On the food and beverage side, on the edibles, I think that may be even a bigger picture for organic cannabis, making organic edibles and sugar-free edibles. So lots of, I think that the organic supply of cannabis is a very important piece of the puzzle, and it's just a matter of if we can grow it at scale or continue to grow it at a smaller scale, much like the organic vegetable market.
Yeah, I'll add this. You've heard me say before that we like to, on important strategic questions, we like to measure twice and cut once. So as Terry indicated, if we find that there is an increasing appetite for organic cannabis products, we'll be there. But we don't want to overcommit to that until we see that the demand is there. So measure twice and cut once. We think it's a prudent way to operate.
Thank you.
Your next question is from Michael Levery with Piper Jaffray. Your line is open.
Good morning. Thank you.
Hi, Michael.
Just wanted to touch on the U.S. You expect legalization federally in a few years, like roughly everybody. Can you just give us a sense of how you envision entering the market? And would I be hearing you right that you think some of your capacity you already have planned would be available for export to the U.S.? And if that's the case, what would be needed from a regulatory perspective to allow for that?
So the first thing I want to do here is emphasize that we are not making any news on that point today. And then I want to reiterate what we've said before. we obviously will be in the U.S. and will be in the U.S. in a big way at some point in the future. It will always be in a way that is consistent with U.S. federal law. We will enter when it is permissible on a federal level in the U.S. There are some ways to enter earlier. We'll also do this in a way that is consistent with the requirements of our exchanges. But Terry, I know, wants to speak to this. Terry?
Sure. Yeah, the U.S. is an interesting country, to say the least, with respect to cannabis. The states all have much different regulations, varying regulations from state to state. I feel Nevada is probably the best state for a Canadian company to enter into. And the regulatory changes that are forthcoming, we don't know what they'll look like. If they don't erase the state-to-state lines in the cannabis space, once legalized, then it's a very difficult market to operate at scale in. Right now, they have multiple state operators, like multi-state operators, MSOs, that have small facilities in their various states. Well, that's not really the Aurora way of doing things. And if we do go to the states, we'll be focusing on the large population centers that are not fully established, that have regulations that we're able to operate in with profit. If they erase the state lines, that whole picture changes. If you're able to cross those state lines, then it becomes a massive cannabis market. As far as the export into the states, again, we don't know when that will happen. We're allowed to export to a number of countries now. I don't know why we wouldn't be able to export into the United States. The demand will certainly be there if indeed we're allowed to export into the United States. We look forward to our brothers down the south getting that going sooner rather than later. The hemp industry in the United States, the Farm Act, allowed for the usage of CBD derived from hemp with 0.00 THC. That's a limited market at this point, as it only includes topicals if you really want to go through the letter of the law of federal legislation. The FDA is looking at the ingestible CBDs in the states, and yes, I know many states already sell it. They're selling it federally illegal, as the states that have legal cannabis are selling statewide, are selling federally illegal. But it is something we have the finger on the pulse, very, very close. You have to understand, Aurora's not being blind to what's going on in the United States. Australis is doing well for a startup company. It's done 4 or 5 deals. It's our little brother. We have back-end rights with Australis, and more to come on that later. But it's something we feel very confident, as do most, will be legalized. It's how it's legalized is the question. Is it going to be legalized medically, state to state, or adult use to state all at once? We don't know. Nobody knows. And I don't think the government knows. So that's a ways away. It's one step at a time, and we are taking the steps necessary to do that in an organized fashion, as Cam said, measure twice, cut once.
That's really helpful, color. Thanks. Just a follow-up, sort of the flip side of the question. To what extent do you have any of your capacity plans, even sort of vaguely earmarked for the U.S., or and have the opportunity to export there? Would you have to rethink a little bit, how that gets put to use?
Yeah,
and you brought up there. Go ahead. Go ahead, Terry.
Sorry. Again, we don't know, and that's certainly not in our capacity plans at this point. We have a strategy of entering into the U.S., and that strategy is obviously confidential. But I would expect if we have an overcapacity in Canada and the rest of the world, we would love to ship to the U.S., but I don't think we'll have that capacity, depending upon the timing. Even if they announced that they're going to have a legal system, it would take years federally to get the regulations in place and the proper capacity in place. And certainly your first mover advantage will go to your MSOs, which we will look at. There's some cherry picking to do on the MSO side of things, but there's no need to rush into it. It's going to iron itself out. We've got some overvaluation there, and I think you'll see a significant rise up in valuations if they move towards legalization. But valuing these MSOs just based on their retail doors is, in my opinion, a mistake, because you can always open more retail, states can always open the door to more retail. We're seeing that in Canada. We're seeing the value of the retail stores that had got lottery wins, drop significantly. So we're quite happy that we didn't jump into that fray. But does that answer your question? We don't have any plans to export anything into the United States at this point.
Right.
It's not in our future just yet.
No, I think that's the key point. If I understood you correctly, you asked if we're counting on supplying the U.S. from Canada. Absolutely not. We have not built that into our plans at this point. The other thing to emphasize is, once the opportunity exists to build production in the U.S. For us, we build the best cannabis production facilities in the world. I think we've clearly demonstrated that with the highest efficiency, use of automation and technology that nobody else has thus far been able to touch. And the result of it is premium product at a real, at economical cost. So, once the opportunity exists, you can expect that we're going to be looking at using our technological lead to build that capacity ourselves in countries around the world.
Thank you. That's really helpful color. Thanks a lot, guys.
Great.
Your next question is from Graham Kreindler with 8 Capital. Your line is open.
Hi, Graham.
Graham Kreindler with 8 Capital. Your line is open.
Graham, you still there? Did you go to sleep?
Your next question is from Jason Zanderberg with PI Financial. Your line is open.
Hey, Jason.
Hi, guys. Hey, I wanted to drill down a little bit on your medical cannabis sales. As an industry, we're starting to see medical sales decline, and that's very typical in other regions that have adopted an adult use program. The medical sales tended to trail off a little bit. You guys have actually seen a growth in your medical, although not a huge number, but nonetheless growth. What do you attribute that to? Is it your coverage of the excise tax? Is it providing product identification numbers? Can you sort of give your opinion as to why you're bucking that trend?
Oh, yeah. I mean, it starts with the fact that we make great medical cannabis, and everybody knows it. Listen, you say that it's ticked up a little bit, and you're right. It only increased about 5% in terms of patient count in the last quarter, 8% increase in Canadian medical cannabis revenue sequentially. But let me emphasize, that was our choosing. We wanted to make sure that we had exactly the right product allocation for each of our distribution channels: Canadian medical, Canadian consumer, and international medical. And so we actually could have turned on the taps and brought in a lot more patients. Now, why is it? I'm not kidding when I say we produce great medical cannabis products, but we also have an extremely good reputation across all of our brands, Aurora, MedRelief, and CanaMed, among physicians. So our credibility, supported by our clinical program in the medical community, is outstanding. Now let's get to where medical can go in Canada. And obviously for us, we see increased demand and increased patient counts and increased Canadian medical cannabis sales, which is great because medical cannabis patients tend to be sticky. Consumers, you never know, but with a medical patient, they're likely to stay with you as long as you keep them happy. The other thing that would be a bit of a wild card to keep your eyes on would be the possibility that the excise tax, which, as you point out, we've been absorbing for our patients, could be eliminated. I'll remind everybody that we had a press conference not that long ago in Ottawa, along with a patient advocacy group called Canadians for Fair Access to Medical Marijuana, and also on the stage with us were members of Parliament from the Conservatives, the Liberals, and the New Democratic Party. And there is strong support in all three caucuses to start to treat medical cannabis the same as other prescription medicines. And if we get that excise tax and ultimately the GST and HST removed from medical cannabis, it will be, first of all, justice, but it will also be an appropriate reason for patients to stay in the medical system. And before we stop on this point, I want to emphasize that patients who are using medical cannabis to manage the symptoms of a chronic health condition should be getting their medication by prescription. They should be getting their cannabis by prescription and consulting with their physician. Physicians and, frankly, pharmacists should know about all of the medications that patients are consuming. So there are good reasons for patients to stay patients, and certainly good reasons for patients to come to Aurora.
No, that's a great answer. I looking forward in upcoming quarters, would you expect to see that trend continue in terms of continued growth on your medical cannabis? Obviously, the rec market will continue to grow, but do you expect that to happen continually with your medical sales?
Yes, on an Aurora, I don't want to predict the whole market, although I think it will actually be good. But on an Aurora basis, yes, we expect our patient count and our Canadian medical cannabis revenue to continue to grow.
Yeah, was your question a global or just a Canadian question? Because obviously, the other 23 countries that we're operating in do not have adult use systems, and those medical systems are just starting now to blossom.
Oh yeah, no, I was referring to the Canadian market. Yeah.
Okay.
Yeah, and I understand the question because we've seen kind of differential results across different companies in the sector. But we've always emphasized medical cannabis. We've supported that with a great clinical program. We are really, really good to our patients as customers, and so yes, we do anticipate continued growth on the Canadian medical side.
Okay, great. Thanks very much.
Your next question is from John Chu with Desjardins Capital Markets. Your line is open.
Hi, good morning. Maybe just a quick question on Europe and how you plan to allocate your increased production between Europe and we'll call it the value-added market. So the way I look at it is Europe is effectively a fairly limited competition because there aren't that many EU GMP certified facilities. Then you also have edibles, which has a lot of competition from a lot of the smaller players here in Canada. So how would you try to prioritize the two, and maybe just talk about what the margins you get, which ones are higher, with whether the EU...
Sure.
Thank you.
Yeah, well, let me start, and I know Terry will want to weigh in on this as well. Let me start by telling you how much we love Europe. Europe is a market where, as you point out, there's very little competition. There's only one producer in Europe right now, and it actually is one of, I think, 8 that are EU GMP certified, and that is Bedrocan BV in the Netherlands. And of the remaining EU GMP certified facilities, we've got 2 out of 7, and we're undergoing audits right now to add additional facilities. So very, very limited competition, very limited supply. It's a supply-constrained market, and we are really ramping up now to be able to supply that market. So the bigger picture here is a question of product allocation. And we've developed a very sophisticated product allocation protocol and team that we're very proud of that works on demand planning, so we know where the demand is going to be, and helps us calculate where we're going to generate the highest margins. Now, it's no secret that the Canadian consumer system is a lower margin distribution channel for us than Canadian medical and international medical. The margins in Germany, for example, are extremely good, in part because of currency differences, but not completely. And you will see us allocating more of our product to Europe and, frankly, to other jurisdictions around the world as those markets open up. And again, we're going to be a big part of that simply by removing supply constraints. So we do make a constant series of decisions on a rolling basis with respect to product allocation. Terry?
Sure. Thanks, Cam. Interesting, the product allocation team, I felt sorry for them for the last year for sure, because we didn't have the product for them to allocate. We're now definitely starting to have that product allocate, and certainly in the Canadian consumer usage market, it is lower. The provinces underestimated the demand. We underestimated the demand, and it continues to go up. We don't know what that demand is until it's met. The European market, we have boots on the ground now in Italy, Germany, Malta, Portugal, the UK, the Netherlands. So these are our booths on the ground, not small contracts or small pieces of companies. We distribute cannabis ourselves in Germany. Now, getting that contract, only 3 LPs of the 79 applicants were awarded that contract. Obviously, the demand in that contract is going to go up, and obviously the first movers that successfully execute will have first crack at the expansion of facilities. That's when the dirt will really hit the road. The fall of 2020, again, I lose sleep over being able to supply this global market. The European market is going to go nowhere but up. It's going to start, maybe not this quarter on the hockey stick, but we'll start shipping in bulk to Europe before too long. We're the first to sell high-value derivatives in Germany, which are now starting to get some traction with the doctors. We are going to educate the entire EU the best we can with our team of physicians and PhDs and thought leaders in the cannabis space. It is it's just waiting to be cracked. It's not even scratched the surface yet in Europe. Yet you're seeing the increases. They still will take whatever we can give them. But we have to keep care of our medical patients here in Canada, and we have to have a presence in the adult usage market in Canada. If it was a pure business decision on a mature industry 20 years down the road, we might, at these prices, we might pull the pin on the adult usage market in Canada 20 years from now. But we're not going to do that. We're Canadians. It's Canadian medical patients first. It's European patients second, and it's the adult usage market third. But we will dominate in the adult usage market as well because of the quality of cannabis that we grow, because of the cost per gram of cannabis that we have, and because of the increased capacity that we continue to bring online. Everybody remember, we are building a sky-class facility in Denmark as we speak. We are growing cannabis in Denmark quite well in our phase 1 of Aurora Nordic. So once we can start supplying Europe from there, it will help with our other international initiatives.
Yeah, and in terms of helping you understand another reason why we love Europe so much, if you think about it, that's a population, including the UK, of around 500 million, okay? So well larger than the US. But whereas in the US, with its kind of patchwork regulatory system, there are thousands upon thousands of producers, in Europe, there's one. And us, and a handful of other Canadian companies, with high barriers to entry because they believe in tight regulation. So we'll be in the US, obviously, as soon as that's permissible. And we're also prepared to operate in two very, very different markets. The US and Europe appear for years and years to come to be very, very different. And so we want to be set up to succeed and win in Europe. And we're already building the infrastructure for that right now. We're very, very pleased at the direction Europe's going.
Okay, great. That's very helpful. And then just quickly, maybe just a quick update on OnWave. When do you think that's going to get integrated and can make a meaningful impact? And then same on the Radiant. You received your first shipment. Are you happy with what you got? And then when can we start to see a more meaningful impact to your numbers and on the efficiency and everything? Thank you.
Glenn, we haven't heard from you in a bit. Do you want to address that one?
Sorry,
Glenn, you still with us?
Yep. Yeah. Can you repeat that? Sorry, just missed it.
We're talking about when we anticipate contribution from the integration of the OnWave technology and also Radiant demonstrating commercial capabilities. And yes, we're very, very pleased with RTI.
Yeah,
so when do we
Radiant,
expect to see contribution?
Yeah, as you would have seen through press release, Radiant has just been recently licensed, and we've, I believe, received our first commercial batch back from them. Still relatively small volumes. We expect to see that actually impacting our ability to produce derivative products towards the end of this quarter. So we're kind of in the last 6 weeks now. So we'll say June we'll start to see some of their product making it into our production chain. Most of that extraction goes into products that still take a little bit of time to show up on the shelf. So towards the very end of the quarter. OnWave will just shorten the drying time, allow us to speed up extraction, which in effect does kind of accelerate our capacity. That's in the still being implemented, so we won't see that in Q4. We'll see that in Q.
The other point I'll add with OnWave is they also reduce the risk of of crop failure or a production failure with a very short time frame from off the plant to dry. There is risk in drying systems where molds can come in and other bad creatures and more people are around. And when you shorten that time, it once again de-risks the process of production of cannabis.
Yeah, and I do want to emphasize, we haven't had that problem, but we know it exists. And what we've just really talked about here, and you've got two great examples, RTI and N-Wave, those are really consistent with our overall business strategy, which is to reduce all risks as much as possible, and also to accelerate the entire process from cultivation through to production, getting it to market. That is consistently across the board our strategy. And so you've picked two really good ones to focus on, and they are entirely in line with our global strategy.
Your next question is from Doug Mee with RBC Capital Markets. Your line is open.
Good morning.
Hi, Doug.
Questions. Yeah, hi. Just with respect to how we're thinking about the Q4, I know that you've indicated that you are going to show some positive EBITDA, so really part A and B there. How important is it that you actually do that? Is it more important that you have enough product for the value add launch, or is, saying what you're, going to do in terms of producing that EBITDA for Q4 the most important thing? And then part B of that is just with respect to the recent acquisitions, so Whistler, Hempco, and Chemi, are they contributing to you guys having positive EBITDA in Q4?
I'm going to start and then hand over to Glenn. So actually, I would say that one of the most important things that we did when we put out that guidance in January, that we were targeting positive EBITDA in the June quarter, in this current quarter, was we signaled our discipline. And it's showing, if you take a look at our revenue growth compared to our SG&A growth, SG&A being relatively flat, it's showing. We've been just focusing on that disciplined execution. So setting that target on its own has been remarkably beneficial to us. And we've been getting that feedback from institutions as well. It is important, I think, to differentiate by showing a clear path to profitability. And it's something that we've made a commitment to that differentiates us from a lot of our peers. And so it is very important to us. But the nice thing is with where our production has gone, we can kind of have our cake and eat it too. So we can continue to track towards positive EBITDA in this current quarter and have sufficient product supply to have the inventory to produce those new higher value-added products that will be allowed by regulation. It's a great situation to be in, and it's happening at exactly the right time for us. Now, the second question that you had was with respect to the recent acquisitions and whether they're anticipated to contribute to achieving positive EBITDA. I'll defer to Glenn on that, but certainly not substantially. We were tracking that way before these things. Glenn?
Yeah, thanks, Cam. So, just to the first part of your question, though, on the Whistler and the Chemi and those, they're not running negative. They're running positive. They'll contribute, but not substantially. As Cam said, we based our EBITDA positive forecast on our core cannabis business. We do have this quarter about $6.5 million of revenue from other business lines that are non-core cannabis, but and they do contribute at least a 50% or greater margin on average. So that'll help, but we're really trying to drive the discipline and the growth in the core cannabis piece of this. The allocation decision, there are some really healthy debates internally, but as you would expect, a lot of this is dependent on when Health Canada is going to allow the introduction of these new products into the market. You see various signals at times from the regulators as to when LPs will actually be able to start shipping these products to provincial distribution centers. So should that happen towards the end of the year, should we get clarity that those sales won't start towards the end of the calendar year, we may have more product to allocate into revenue in Q4 and Q1. Should it be available earlier, then we'll have some decisions to make how much of that actually goes into inventory as opposed to revenue. But as Cam said, at least we've got the production now coming to make those decisions. The EBITDA piece of this is very, very important to us, not only in terms of the commitments we've made to the market, but also just as internal guidance as to our priorities. But we still have a focus on the long-term value that we're creating, and it's very important to launch properly into those product segments that we want to capture towards the end of the year.
Okay, that's very helpful. And then just my follow-up question, Cam, with respect to basically the capabilities that you're putting in place outside of Aurora Polaris in anticipation of the launch of the value-add products, could you just give us a little bit more detail? Because as I think about this marketplace and this sort of the problems that we observed in Q4 of 2018 with the rec launch, I just want to make sure that you guys are following the proper steps to ensure that you're going to have products. So do you have all your vape lines going in? Where are they going in? Where do they stand? Licensing, that sort of stuff. And then I'm finished. That's great. Thank you.
Okay, so you asked for a little bit more detail. We can give you a little bit, but not a lot. We don't want to show necessarily all our cards, but what I can tell you is that all of the capabilities for the market segments that we prioritize, it's all in place. And as Glenn indicated in his comments, we wanted to make sure that from an Aurora perspective anyway, we won't be seeing some of the challenges that the entire industry faced not being ready for consumer legalization in October of last year. So we have, across multiple facilities, we've got the capabilities in place to produce those products. Polaris is going to be amazing. It'll be world-class, and I think there'll be nothing like it once it's opened up, but we do not need to wait for it to be online for us to deliver those product forms.
Thank you. Your next question comes from Rob Wertheimer with Melius Research. Your line is open.
Hi, everybody. Your production ramp has been impressive so far with no real material hiccups and stumbles and so forth. And the question is a little bit if you can give us any more background on just how you do it. But other people in the industry have had crop failures. There's the product that hasn't grown quite as well as yours. And so how do you evaluate the risk of that? Do you see little issues pop up and you quickly mitigate them and fix them so there's no risk of a larger issue? Or do you not have the issues pop up because of more automation, because of more... Anyway, I wonder if you could just expand on that a bit.
Yeah, no, I really want to speak to this, and I'm going to start by making Terry blush, because the first and greatest credit for this is Terry's vision. Terry went in a different direction from every other founder and CEO in this sector when he decided that cannabis production should be purpose-built. So north of Calgary, our mountain facility, that's the first purpose-built cannabis production facility in the world to our knowledge. And what that does is it gives you GMP, by the way, GMP standard, everything from the cultivation rooms to the airflow inside, and the ability to manage all of the environmental variables, the lighting, the temperature, the humidity, the CO2, the nutrients. And every other peer of ours that is producing at mass scale has done something different again as we've all scaled up, whereas we've gone with these massive indoor facilities with a glass roof, the sky-class facilities. All of our peers producing at mass scale are doing it in retrofitted greenhouses. And you can argue there are advantages and disadvantages to each approach. We really like our approach because as you heard me say earlier, at this phase in the sector's development, the number one critical success factor is the ability to consistently produce and move and sell a large amount of cannabis. And our entire business strategy is set up to do exactly that. So you control the environment, that reduces the risk of pathogens and pests and therefore crop loss. And touch wood, we've never had a crop loss, and I hope we never do. Terry, you probably want to weigh in on this because you're the innovator here.
I do want to weigh in. You nailed it on the head. And come to most respects with respect to environmental control. CO2, micromoles, humidity, temperature, all those factor in, and you have to stay within a certain band or you will lose control of your facilities. One thing affects the other. With a typical greenhouse, you have environmental risk with the roofs opening to cool them down. You have risks with the variable temperatures, whether it be raining or snowing or hot and sunny. So environmental control is a short phrase, but a very, very difficult thing to do right. Secondly, you mentioned automation, and you nailed it on the head a bit there, because automation takes the human being out of the picture with direct contact to the plant. That is one of your highest risks of disease, are the human beings, and then the last one is GMP. And GMP is the direction of essentially, it's the direction of the product flow. You never go backwards. You never go from a dirty room to a clean room. It is it's a flow process. It's a pharmaceutical process. It's highly recognized throughout the world in the pharma industry. And those three factors, along with 40 PhDs and the top QA team in the world, and some very experienced horticulturists and growers, equate to no crop loss.
And by the way, I got to add this before we wrap up, and I know we only have a couple minutes left. We truly believe that we've invented 21st century cannabis cultivation, and we also believe, and this is central to our business strategy, that you have to do that if you want to build a global enterprise. You've got to have that consistency. You've got to mitigate risk. You've got to do it economically, and it's got to be scalable and replicable on a global basis. That's what we set out to do from the beginning, and now at Aurora Sky, we think that we validated that Sky Class concept to do exactly what we've been planning to do from the beginning.
Thank you much. This concludes the Q&A portion of today's call. I will now turn things back over to Ken Batley for any closing remarks.
Yeah, I just want to thank everybody for joining us for the call, and obviously we're really looking forward to the next one as well for our year end. So take care, and everybody have a great rest of the day.
This concludes today's conference call. You may now disconnect.
So there you have it. Conference call is over. I'm glad you're happy with your investment. Honestly, that wasn't bad. I'm not disappointed. I've been keeping an eye on Aurora charts. On the bright side, we are still currently uptrending. I did call a couple things right. One of them being this resistance line at around $8.48. We almost broke above it and then immediately got rejected. Right here, we came close to it. Immediately got rejected as well. On the bright side, Aurora Cannabis is uptrending. We are only up 0.72%, which is disappointing compared to Tilray. I think Tilray is up a lot more. Tilray is actually down. Let me just refresh this, make sure this is correct. I want to check how Tilray is doing right now. Tilray is down 5%. So there you have it. Aurora Cannabis is currently, or was in the green at 0.72%, up 0.72%. Tilray is in the red. Let me know what you guys think about. Yeah, the conference call was very good. I'm definitely not disappointed. I'm gonna probably be dropping a video on Aurora Cannabis and their earnings, because yesterday's earnings was like a 4-hour video. So I'm gonna try to just talk about the earnings in less than 15 minutes and just summarize everything. Maybe I'll have an earnings call video as well, and I'll just have the highlights of the earnings call, because that was also a pretty long video. Not complaining either way, guys. Thanks for joining me. Smash that like button. If you guys want to do a couple more requests before this live stream ends, whoops, just send me your companies and we can take a look at them. We're at 99 likes, guys. One more like. There's 124 people in here. Just smash that like button. One more person. Let's get that to 100 likes, and that will make my day. But either way, thanks for joining me, guys. Let me know if you guys want me to take a look at any other companies. If not, we're gonna call it an afternoon, and then just gonna grab more. Just gonna grab some more Aurora Cannabis. Honestly, I was expecting a pullback. But I guess in the meantime, I would love to see Aurora Cannabis break above this resistance right here. I would also be curious to see if Aurora eventually breaks above. Let's go back in time a bit. I think we have another resistance at around $9 or something like. Let's just look at the charts. So yeah, we have a resistance here at $9.25. So one obstacle at a time. You guys seem to be happy with earnings. Man, just gonna grab more. I think many people, let's see what Y has. I think many people sold. Haha, lost some investment because everyone thought it would tank after the Q3 earnings report. GTTC8. Not sure what that means. Is that a company you want me to look at? GTT? I will add more if they drop to 7. No comparison. ACB versus Tilray. Exactly. I was just very disappointed to see Tilray shoot up after earnings and then Aurora Cannabis not do much movement. Okay, we can take a look at GTT Communications. I'm gonna do a couple more requests and then we're gonna wrap up this earnings call because I haven't ate breakfast yet actually. So GTT Communications. Also, if you guys are watching this this live when this video gets recorded, I will be putting a timestamp for the earnings just so you guys if you guys want to go straight to the earnings call. But for now, we're just gonna look at a couple companies. The market still seems to be in the red. I want to just see how. Actually, no, the market is doing good now. S&P 500 is in the green, Dow 30 is in the green, NASDAQ is in the green, Russell's in the green, crude oil and gold all in the green. And just like that, everything's in the green. And I think someone said something about some news with Donald Trump. So let's look at GTT Communications. Wow, huge sell-off. We literally broke below every support. I guess I looked at this company in the past. We broke below the $36 support. We broke below the $33 support. We broke below the 36, and then now we're floating at around 27, and we look way oversold at this point. See a couple gaps down. Why did this company drop so much? And this was in a matter of in 1 week. So from May 7th all the way to today, this company has dropped all the way from being a $40 company to now being a $27 company. So a huge sell-off for this company. Let's look at them on paper. They look very undervalued, mostly probably because of sell-off. Price to sales 1.03, price to revenue 0.91. Total assets $4.9 billion in assets and a market cap of $1.5 billion. So definitely this company looks undervalued right now, and we're literally sitting at, I'm going to mark this as a support right here. Or could that be a support? Let's just see. Just trying to find a support line right here. I think we could possibly go as low as $25.50. I'm just going to mark that. See if it goes that low. But this company seems like it's already been beat up. At this point, I gotta find out. Do you know exactly why this company has dropped? This company was uptrending for quite some time. Literally, it's almost the same pattern. 2019 it was uptrending, had a huge spike, followed by a huge sell-off. So pretty much all the gains that we made in 2019, we're about to lose them all. We started 2019, but that was after a nice pullback because everyone was expecting a crash. So I feel like this company still has potential to go up to $45 just by looking at these charts. We're definitely near the bottom of the 52-week range. The bottom would be $21.68. On paper, this company looks good. charts look pretty good, especially because that pullback, but you are catching a falling knife. I would like to see if it hits this support line right here, or if we go as low as $22. I'm gonna draw another support at 22. I doubt we will go that low unless markets continue to crash, but it definitely looks like a really good opportunity. Do they pay dividends? No dividends. So I mean, it was a nice pullback, that's for sure. Don't forget Parcel Pal. Thank you, Travis. Please review TPX. Earnings bad, I think. Yeah, that would be one reason. So I'll definitely review TPX. Thanks for the donation, Travis. TPX. So Temper Sealy International. Let's take a look at them. So currently sitting at $59.82, down 0.3% on the day. So almost the same pattern. A lot of these companies in 2019 have had a huge run, and I'm guessing because they had a nice pullback in 2018. Huge run in 2019 followed by a nice little pullback. What goes up must come down. I just want to look at their financials real quick, but we'll take a look at their technical analysis. Currently a buy, sell, and a sell. 1 minute it's a buy, and a strong buy. So 1 minute's looking good. I want to see how they look on paper. So it's this is a profitable company. P/E ratio of 28. Price to revenue of a 1.19. Price to sales 1.21. Price to book of a 15. Total assets $2.96 billion in assets. Market cap $3.2 billion. On paper, this company does look pretty decent. Price to earnings is a little high, but besides that, I do like how it looks on paper. Let's see potential. Let's just look at the 1 year charts. See how they've done. I'm just trying to find a good support. Obviously, I don't expect this company to pull back all the way down to $40 anytime soon. But let's just see. We might have a support here at around $58. I'm going to draw a support line here at $58 because it acted as a resistance here. And we're going to see if it bounces off this support. We are, of course, currently downtrending. We hit a high of $68, which I think was the 52-week high. We're in the top half of the 52-week high, so we still have a lot of room for downside versus upside. So I think it does have potential to go down even lower, but let's just look more into these. I just want to see the all-time charts. Has this been a very volatile company? It's been fairly volatile, so after huge runs, I would expect a pullback because that's what we've seen. Huge runs, pullback, huge run, pullback. It's been consistent, so I won't be surprised to see a pullback. I do see a consistent support line here at around $44. We could call that a support. I think anything below this line, I'm going to mark it red, would be a strong buy. Anything below $44 would be a strong buy. And at this point, we do see a resistance at around $64. So I'm going to put a resistance line here at 64, which we literally just recently went above it and then got rejected. So, and of course, it would be nice to see them hit these highs again of $80, but that would be considered a strong sell, and I'll mark that as blue. So yeah, anything below $44 I would consider a strong buy. Anything above $80 I would consider that a strong sell. In between the red and this green line would be tempting, and then in between these two lines I would probably collect some profits. But as of now, on paper, it doesn't look bad. It is a profitable company, but that's about it for this company. Good day, guys. Checking out. Anyways, thank you guys for joining me. Let's see. Someone, don't forget about Parcel Pal, please. Oh, I will. You know what? Since I owe you guys a couple of videos. I owe IJ a video on dividends, and I'm gonna make a video on Parcel Pal too. I know I said I would do that a long time ago. I'll check out ISV. I'll look at one more company before I go. I feel like, let's see how long this live stream has been going on for. 3 hours and 24 minutes for this live stream. So it's been quite some time. But I did take a little break to clean up the puppies at least during the call. So this is ISV, Information Services International. No, what is it? No, wrong. Information Services Corporation. This is a real estate services company. So right off the bat, you could tell this company, okay, no, this company has been around since 2013. We have a resistance line here at $20, $19.50. We could say $20 as well. I'm just going to market these two lines because anything in between here I would consider a strong sell. And then we do seem to have a support here at around $14.50. Strong support. I'm going to mark that as a red. So red is strong buy, blue strong sell. I'm just going to mark two red lines. Might as well double mark it here as well. And almost the same pattern as well. Let's just look at the 1-year charts. 2019, we had a nice run. 2019 uptrending all of 2019, and then recent pullback. I'm starting to see this pattern consistently in a lot of companies. We also, so most recently, we do have a support here at around, I would say, $16.50 or between here. I'm just going to draw a line. We seem to have a support here. So we're going to see if it breaks below it. It just recently bounced above this support line here. And recently we have a resistance here at around $17. I want to look at their financials real quick. Oh, they do pay dividends, so that's a good thing. I like that about, I'm actually starting to get more into dividend companies. So this company pays 4.8% dividends, so I like that. And it's a profitable company, so this actually looks really good on paper. So price to earnings is 15.5, so that shows that they're profitable. Price to revenue 2.4, price to sales 2.4, total assets 161 million, 290 million. This is actually a really good company. Thanks for calling it out. I like the fact that it pays dividend as well, and I do want to diversify my portfolio. This is a real estate services company, so it's looking good. Obviously, I would love to see it go below this $16.30 line, and then I might consider, or the closer it gets to this red line, I would definitely consider that a strong buy. I like the fact that it pays dividends. I'm glad I looked at it. This is definitely a company I'm going to keep on my watch list. I just have to diversify my watch list and make it like spread it out in sectors. So like I'll have a cannabis sector, I'll have a dividend watch list, I'll have a tech watch list. That way, because right now my watch list has probably like 200-300 companies on it. But that was Anonymous 306. Good call. Are you from Regina? Is that the area code 306? But either way, guys, I want to thank you guys for joining me. I hope you guys smashed that like button. I hope you guys smashed it at least one more time. Looks like it. You guys definitely smashed that like button. So thank you guys for smashing that like button. 114 likes. You guys are the best. Thank you guys for joining me in the earnings call. There was no questions on that, eh? I'm gonna probably do a video. I'm gonna do the highlights of the earnings. I'm gonna do the highlights of the earning calls. So I'll be working on that today. Probably be dropping it today or tomorrow. And that's it for now, guys. Thank you guys for joining me. And hope you guys enjoyed this. If you're new here, don't forget to subscribe. Also, if you haven't smashed that like button, don't forget to smash that like button. I'll probably be dropping a video out soon, and I'll try to live stream tomorrow in the morning as well. Try to keep these live streams more consistent. So thank you guys for joining me. Also, don't forget to join my membership. It's only $4.99 a month. You guys will always get #1 priority in requests. And also, you guys can request your own personal videos, which you just got to cut me some slack and give me some time to work on it. So thank you guys. Smash that like button. I'll see you guys on my next Saskatoon, originally now in Santiago. See, I recognize that that area code. I actually bought a house in Regina, Saskatchewan. Still own it. So yeah, I lived there for a while. But yeah, either way, guys, have a good day. I'll see you guys next time. Bye-bye.